All right, if everybody go ahead and take a seat. All right, legislators come here on the wall, and that'll free up some extra seats for this turnout. Want to make sure everybody's got a seat. If you are here to observe or to speak and you don't have a seat, feel free to fill in these seats on the sides here up at the table. We got a few more minutes before we get started, but want to get everybody in here. There is a sign-up sheet right over here by Professor Hartwig. Please raise your hand. Please raise your hand. There's a sign-up sheet. I've got a lot of the sign-ups for speakers, but if you want to speak, please sign up right there, and that way we'll make sure you're there. We'll give a few more minutes to get all of our members here, as well as connected. We've got a couple who are online. All right, welcome to the House Insurance Rate Study Committee's meeting in Savannah. We appreciate everybody coming out today. We appreciate Georgia Southern's Armstrong campus for hosting us. Sarah Powell, thank you so much. This is a legislative weekend for Georgia Southern and Statesboro, and glad to add this on here. It's great to be here in Savannah. I want to thank committee aides David Hartman, as well as Shakira Nash of 401 CLOB for helping with sign-ups for this or any future meeting. Definitely let them know, and we'll get you on the agenda. We've got about 15 people signed up to speak. If you haven't already had an opportunity to sign up, please sign up there by Professor Hartwig, and we'll get you there. Let me introduce, or let the members of the committee introduce themselves. So we'll start with Chairman of the House Insurance Committee right here.
Eddie Lumsden, I represent Floyd and Chattooga County, 12th District. Been doing this for about 13 years now. Pleased to be here and look forward to hearing from you.
And members, just punch the button. When it turns green, you'll have the mic on. For anybody who missed that, we got House Insurance Chair Eddie Lumsden of Rome, Georgia.
Sue Hong, I represent North Gwinnett and South Hall counties. Thank you.
Thank you, Mr. Chairman. Trey Kelly, I represent the 16th House District, which is made up of all of Polk and a part of Paulding County. Thank you all for being here. Look forward to it.
Representative Emery Donahue, District 31. I represent Jackson County, Hall County. This is my 15th year coming up serving. And in case you wondered, next time your wife asks to get her a cup of coffee, just go ahead and do it. My arm's not been the same since.
Jacqueline Ford, I represent District 170 in South Georgia and Berrien, Cook, and Tift counties.
Al Williams. I represent Liberty County, District 168. I've come farther than any of you, about 20 miles south of you.
Joseph Gull, I'd represent East Paulding County and West Cobb County, District 19.
And we have a few members online. I'll turn it over to Justin or David on that.
Mr. Chairman, this is Chuck F. Stration. Glad to be with y'all today through Zoom. I had a scheduling conflict I couldn't get out of, and I appreciate you, Chairman, making this possible so I can watch. I represent parts of Gwinnett and Barrow counties.
Thank you, Majority Leader F. Stration.
Hey, Mr. Chairman, this is Todd Jones. Oh, Noel, you want to go first? Because you're bigger and stronger than me.
Well, everybody knows that. Go ahead.
Well, Mr. Chairman, I'm going to ditto what the majority leader said. Thank you so much. Todd Jones, District 25, representing South Forsyth County and North Bolton.
And I'm Noel Williams, House District 148. I represent Chris Pulaski Wilcox, a portion of Houston, portion of Ben Hill. Sorry I can't be there today. My daughter has 5 new parents weekend in Athens, so I'm in God's country tonight.
Any trips to UGA this time of year, excused absences. And we're proud to have the speaker put you on this committee as somebody in the insurance business who knows a lot about that.
Thank you.
If I get down to here. Anyone else online?
Yeah, Michelle Au, House District 50, representing North Fulton County. Thank you for making this hybrid. Appreciate everyone to be here.
Representative Dr. Al, thanks for joining us. It's good to have my neighbor from Northeast Atlanta on there.
Mr. Chairman, good afternoon. This is Representative Carolyn Hughley, also online.
Thank you, Democratic Leader Hughley, and thank you so much for organizing our October 17th meeting at Columbus State at 2 o'clock on October 17th. We look forward to talking about car insurance and the premium tax at that next meeting.
We look forward to it.
Chairman Shaw Blackman, are you on?
Yes, sir, Mr. Chairman. Thank you.
We appreciate you tuning in from Houston County. The Ways and Means Committee you chair, I know, will be working on that premium tax issue, anything that comes out of this committee. And I appreciate the work that you, Representative Kelly, and others have put into that important issue. Thank you.
Thank you, and thank you for your leadership on all of these different facets of what we're doing here. Thank you, sir.
All right. Well, let's get started. We have renowned insurance professor from the University of South Carolina, Professor Hartwig, who has spoken to Georgia State government before and is coming to speak about these issues of insurance rates, premiums, profits, claims processing. So welcome, and the floor is yours. While you're approaching the podium, I got to tell you, I went to a Duluth Fall Festival meeting last night. Our Grand Marshal recently was George Rogers, who won the Heisman Trophy. He's a Georgian who won a lot of football games in South Carolina. And so, you know, Augusta, Savannah, many communities in Georgia border South Carolina, and we appreciate you coming here to shed light and do a deep dive on insurance issues to this committee. And my most famous relative, the late Coach Dan Reeves, also went to South Carolina. So y'all quit getting these good Georgia football players over there, but the floor is yours.
Thank you very much.
Let's get that. Okay, there we go. Okay, hopefully everybody can hear me now. All right, so I'm going to get straight to it here. I was asked to come and speak primarily about homeowners markets and the drivers that we see in terms of homeowners rates in in Georgia these days, but I'm going to expand that a little bit and talk about a few other things. Let's see, these slides are moving by themselves, but okay, we will deal with that. And I'm going to stand over here so I can actually see what's going on in the slide. I'm going to give you a sense of what's going on in the homeowners market here in the States and a little bit more broadly in terms of the profitability trends in the homeowners line and overall property casualty insurance, and compare it to some neighboring states as well as the U.S. overall. And then, of course, one of the major drivers will be catastrophe loss trends. I don't think that's a secret for anyone, but I'm going to drill down into the numbers. And I know we have, I'll be followed up by someone from IBHS, Insurance Institute for Business and Home Safety, who'll be talking a lot about these sorts of things as well. So we'll try not to duplicate that. But very importantly, you'll see that the demographics is an important driver, at least of aggregate losses, insured losses here in the state of Georgia, as it is in many other states. We'll talk a bit about the impact of inflation and tariff, how that might be impacting property claim severities as well, and a few suggestions for managing home insurance premium growth in the future. But again, we have an expert on that who'll be following immediately after me. And anytime during this presentation or afterwards, of course, I'll be happy to take your questions. So let's get straight to it. How is the homeowners insurance market in Georgia doing over the past several years? We know that the state has been subjected to very high, if not record high, catastrophe losses, like the rest of the nation, high inflation. And this is a very rapidly growing state, of course. So you got a lot more people living in harm's way than you had a number of years ago. All of these things come together to drive insured losses upward. And I'm going to try to decompose some of those for you right here. So as I mentioned, we've got kind of these macroeconomic issues between economic growth, demographic growth. We have issues with respect to the frequency and severity of climatic events. And then we have some government-related issues, some regulatory issues as well that I will address, including legal system abuse. So here are the actual most recent kind of hot off the press numbers, if you will, for the homeowners market in Georgia. So I know this committee is used to dealing with a lot of statistics, but just for the sake of it, I'll describe this combined ratio. You can think about this as everything the insurer pays out relative to everything it takes in premium. It's that ratio. It's what the outgo to the income. And in Georgia, what you see in 2024, this ratio of what insurers are paying out to relative to what they're earning in premium, it was about 144.9. What does that mean in plain English? The way I describe it to my students, I'd say for every $100 the insurers earned in premium, they paid out $145 essentially in loss and associated expense. In 2023, Georgia, right here, the blue line, they paid out about $116 for every dollar that they earned. And you can go on down the line, about $111 in 2022. It's close to break even in 2021, but about $110 went out the door for every 100 taken in 2020. And there was an underwriting profit earned in 2019. So what you could see is Georgia had the worst performance of these states of the Southeast, and far worse than the U.S. overall in terms of homeowners insurance last year. You could see again about 145 compared to 94 was the U.S. number overall. So, as you all know, Georgia had the misfortune of being subject to Hurricane Helene last year. And that is what is driving this number through the roof. And you can see South Carolina got a big chunk of that as well. So South Carolina had a pretty bad year also. So misery loves company in this sense. But it was not a year of enormous losses in places like Texas and so forth in terms of, say, hurricanes and tropical storms. If we look at the most recent 5 years, we have, I guess it's really 6 years, inclusive 2019 through 2024, we can see that Georgia's combined ratio was about 112, Florida was about 109, and on down the line. And you can see the U.S. overall was about 101. So this is one of the reasons why, when you look at it, why is it that homeowners insurance rates are rising in places like Georgia? Georgia has, over the past 5 or 6 years, seen insurers pay out over $110 for every $100 they put in premium. It's the simple arithmetic of it. So how did that happen? Well, there are a variety of causes, and I'm going to drill down into that because over the past 5 years, 6 years, as you know, we've had the highest inflation in 40 years. We have had some of the most severe catastrophe losses that we've ever seen, and they continue to ratchet upward. And then and a few other factors I'll discuss as well. Looking at all 50 states, how did Georgia's homeowners insurance market compare from an underwriting perspective? Well, you could see, believe it or not, there were actually a few states that were worse than Georgia in terms of underwriting performance last year, but you had to go all the way out to New Mexico or Nebraska to find them. As I mentioned, the U.S. overall had a much better result. In fact, Georgia underperformed the United States by about 50 points on the combined ratio. And in terms of the 50 states, the best state in terms of loss ratios combined ratios last year was actually Massachusetts. You see a number of New England states, not too much happened up in that part of the world last year. The other thing I think I want you to take away from this is that in any given year, a state could have a combined ratio of 70, and the next year it could be 150. Okay, that's how volatile these numbers are. And so you might have a number of years where the combined ratio is 7, 80, 95, maybe 100, somewhere around there, and then you have a couple of years where it's above 110 and above 120. Insurers operate on a basis of every day as a potential doomsday. They have to be prepared for the worst case scenario, which is basically what 2004 was. They have to assume it can happen every single year. If they don't, they would become insolvent. That's how insurers are regulated and why they're regulated so strictly. But again, Hurricane Helene is the story behind that. If I went back to 2022, just went back a couple more years, we'd see Georgia, again, not a particularly good result, paying on $111 for every 100 they took in. But what we see is they're ranked 11th rather than 3rd in the country, but we're still above the U.S. overall. So that was 2022 was a worse year for the U.S., but not quite as bad for Georgia. But these numbers, again, are highly volatile, highly volatile. In this 1 year, you have got a 120-point spread from the best performing state, which that year was Hawaii, and to the worst performing state, which was South Dakota. So again, to give you a sense of the variability and the volatility, when we talk about risk in the world of insurance, it isn't just what average losses are in a year. It's how much they can vary from that average in a given year. That is a major driver of what insurers are required in order to cover those worst case scenarios. So again, looking at the U.S. numbers overall, what you really do see is you see a sharp ratchet up in the combined ratios. In other words, a deterioration in underwriting performance beginning in 2017. 2017, by the way, stands as the costliest year in global history for insured losses. And it was same here right in the United States. It blew away the year of Hurricane Katrina, even after you adjust for inflation. So it wasn't one storm, many storms that affected many parts of the country. And so to some degree, insurers saw results like this year after year and then began to see the large inflation in the wake of the pandemic, totally unanticipated, was not embedded in the rates. Claim cost severities went up across the board. So to a very real extent, insurers have been adjusting rates to reflect the new reality of the high inflation environment. Everything costs more, as well as this new reality of persistent, sustained, a high degree of catastrophe losses. You know, what kind of losses did we see accelerate in recent years? One of the things you hear very often now is hail-related losses becoming more common, arising from so-called severe convective storm events. Which might contain tornadoes or maybe just hail, but certainly a lot of wind. In fact, the 2022 number I showed you was a year in which Georgia had the distinction of having, I believe, the strongest tornado recorded in the United States that year, EF4, EF5, 185-mile-an-hour winds recorded right here in Georgia in a tornado. So you've got everything going against you here recently. You've got the wind, of course, from the hurricanes and the tornadoes, not so much wildfires, and but nevertheless, pretty much most things you've experienced here in this state. Now, let's take a little bit of a different view, a little bit more of a deep dive into what's going on in the homeowners insurance market, and then we'll kind of spread that analysis out a little bit. Here I'm going to, instead of looking at that combined ratio, the ratio of what goes out to what comes in terms of dollars, I'm going to look at a somewhat different metric. This also comes from the National Association of Insurance Commissioners. And they refer to it as a return on net worth. I refer to it as a return on equity. It's a more commonly used term. And what I'm comparing here is in red, you see above all the other lines, you are going to see that is a number that the NAIC puts out every year. It is the Fortune 500 All Industry Index. So not just insurers, basically think about like the S&P 500. In blue, we have the property casualty insurance industry overall, not just Georgia. This is the US numbers. And then you see the homeowners line return on equity in green. So you see a hierarchy. Okay, very clear. Homeowners, bad. Property casualty insurance, not quite as bad. Fortune 500 looks wonderful. Okay, that's why your 401k is doing fairly well if you're invested in that over the past several years. But it's been a tough haul for property casualty insurers and particularly homeowners insurers in recent years. Now let's drill down and look at Georgia specifically. The same kind of analysis. Here I'm going to compare in blue the U.S. homeowners insurance return on equity, all 50 states, against Georgia, which is what you see in red. So as you might expect, Georgia, given the numbers I've showed you already, Georgia tends to underperform. And over this 11-year period of time, the average return on equity in the Georgia homeowners insurance market, according to the NAIC, is 1.1%. And in the U.S. overall, it was 6.1%. So a gap of 5 points. So that's pretty material. So in a line that underperforms, Georgia is an underperformer of the underperformer in terms of profitability. Okay, there's just no getting away from that, at least in the homeowners insurance line. And that's only through 2003, by the way. Let me go back. The most recent 2023, the most recent numbers from NAIC are 2023. It'll be early next year before we get the 2024 numbers from NAIC, but I would hazard to estimate that the return on equity in Georgia's homeowners insurance market next year will be in the neighborhood of -40, -50%. Okay, it'll be a huge negative number, primarily as a result of Hurricane Helene last year. So these numbers are going to get worse before they get better. It's already baked into the math. All right, so now let's take a look at the overall profitability in the property casualty insurance industry, leaving homeowners behind for a moment. And you see the same sort of issue that I showed you before. All industries, kind of the Fortune 500 in red here, performing relatively well over the past decade or so. You've got the P&C industry kind of lagging behind a bit at about 6%. Compared to about 15 for the Fortune 500. And then you've got Georgia property casualty insurance at about 3.2% over the last decade. So you can see how that stacks up. That's what you are seeing in green. The overall P&C is in blue, and then Fortune 500 in red. So the point of this exercise is to dispel the notion that the property casualty insurance industry at large, whether nationally or across all lines or in the homeowners line, is excessively profitable. If it's excessively anything, it's excessively unprofitable right now. Okay, and it's only by virtue of the fact that insurers remain very well capitalized that they can see through times like this. So it's very, very important. And again, these are the NAIC's numbers. They are not insurance industry numbers. There are some other issues that are going on out there as well. There was a nice study done recently, although the data run 2018 only through 2022. This shows, this is a measure of what is referred to in the study as regulatory rate suppression. What does that mean? This is the number of points, the differential between what an insurer files for that is actuarially indicated and what is approved by an insurance department. And actually, so what you see is that in California, for instance, the typical rate filing that is approved, it's approved for about 29 points less than it was filed. In Georgia, that should say 11 points, not 1 point. So in Georgia, it's about 11 points below what would be typically filed for. Okay, so but California famously leads the country in rate suppression. We probably all saw this in the wake and sort of the aftermath of this in the wake of the wildfires that happened this January. That market was essentially had extreme dislocations even before the wildfires, and those wildfires pushed it over the edge. And one of the reasons why is insurers simply don't have anywhere near rate adequacy in that particular state. Now, in Georgia, let's drill down here and look at all the major lines. It's not just homeowners lines where there are profitability issues in the state of Georgia. What we could see here in red is we could see the underwriting profit. So if it's in red, it's an underwriting loss. If it's black, it's an underwriting profit. And these are points effectively. So what it would mean, for instance, if I just take the Georgia private passenger auto for 2014 to just look at that number, it says negative 8.9. That would mean that in 2014, Georgia auto insurers paid out about $9 more for every $100 that they took in. They paid about $109 for every 100 that they took in the auto line that year. And so what you see is a lot of red, okay? And you're seeing a lot of red because generally many lines in Georgia have been unprofitable over the past decade. If you look over on the right-hand side, you could see the 10-year average underwriting profit or loss across major lines: personal auto, commercial auto, homeowners, commercial multi-peril, and then overall the P&C industry in the state. And in the rightmost column here, I show the gap. What I calculate, I call it the Georgia profit gap, meaning this is what below this is the differential between the profit in Georgia and what it is in the U.S. overall. So the gap ranges from 4.4 points in commercial multi-peril to a high of 11 points in Georgia commercial auto relative to U.S. results. That's what this chart is meant to show here. So it isn't just confined to homeowners. It shows the issue. So again, this is to illustrate the fact that there is no evidence, at least based on any data produced by the NAIC in the last decade, that there is some sort of excessive profitability in the P&C line. As I mentioned, when the 2024 numbers come out, they're going to be disastrous, okay? Particularly in specifically originating in property lines. Now, let's take a look at this chart. What did I arrange here? I showed the underwriting profit for homeowners insurance for Georgia, and I compared it to nearby states. Let's see how Georgia compares in terms of profitability in homeowners insurance for nearby states. This is for 2023, the most recent data available. Well, Tennessee had it a bit worse. So insurers there, home insurers paid out $128 for every $100 they took in, but in Georgia it was about $118. And then you can see some other states, Alabama, North Carolina, South Carolina, and Florida had profits in those years. Now, mind you, Florida, which had a monstrous loss a year or two before that, this is the result of the reforms they had in the state. So the state went from probably the least profitable in the country to one that generated a profit for the first time in quite some period of time. And you see the U.S. overall in middle in yellow there, okay? So that was personal auto. Let me do, so let's just, ask this question, because I know this question has arisen here. If insurers were profitable in 2024, which they were, the U.S. property casualty insurance industry in aggregate across all 50 states did generate an underwriting profit in 2024. And so it's been asked, well, there's a lot of rate pressure here in Georgia. I told you why. The results have been very poor for a variety of reasons. Should profits from other states be used to reduce the rate here in Georgia? And you can answer that in one word: no. Okay. Why is that? There are a variety of reasons, but rates in Georgia are based on the byline experience here in Georgia. And every state, including Georgia, adheres to this very basic NAIC principle that rates not be excessive, inadequate, or unfairly discriminatory. You instantaneously violate all of those if you essentially subsidize one state earnings to the losses of another state. it would violate all three of these. All right. And regulators certainly in no other state would ever approve a subsidy to Georgia, nor would the Georgia Insurance Department ever approve a subsidy to, say, Florida. Okay, that should never happen. And it also creates all kind of perverse incentives. Like every state would say, well, I'm going to suppress my rates because, hey, we'll get a subsidy from the other state. Okay, and you could see where that would go ultimately. So thinking ahead, should profits generated in Georgia in the future, okay, and I'm just going to flip it on its head, this question that's been asked, should we take profits from other states and use it to subsidize Georgia today? Well, how about we take profits from Georgia in the future and subsidize some other state? Everyone would think that is crazy who's in this state. And it is a crazy idea. Of course not. We wouldn't do that. Georgia regulators would never allow this, nor should they ever allow it. Okay. And so that's that question that's arisen here. Now, let me talk about some of the very basic drivers that are, I've already mentioned some of them. It's obvious and it's clear that catastrophe losses are a major driver of what's happened here in Georgia. Over the last 45 years or so, you can see this almost exponential rise in insured losses from catastrophic events, even after you adjust for inflation, especially since 2017. Look at these numbers ever, Bogart, since 2017. By the way, the first half of this year, we're already up to around $70 or $80 billion. It was a very bad start to the year. So it had been the case that average insured cat losses had been increasing by about $10 to $12 billion for a decade after you adjust for inflation. Well, guess what's happened in the most recent decade, the 2020s, first half of the 2020s are already in the book, 2020 through 2024, right? We're up to an average annual loss of $89.4 billion. That's not an increase of, say, 25 or 30%, which is what we've been seeing on a decade by decade basis. That is an increase of somewhere in the neighborhood of about 150% so far this decade. And I have no good news for you here. None. This trend is going to continue. It's continuing this year into the second half of the 2020s. And there's absolutely nothing standing in the way of further exponential increase in terms of insured loss. Population is driving it. Higher inflation is driving it. Higher property values are driving it. More people living in harm's way and businesses in harm's way. All of these are driving it. So just to give you an illustration of how rapidly we are piling on records these days in terms of insured losses. This is my top 26 list of most costly insurance disasters ever in U.S. history. Okay, these are insured losses in a span of about 4 months, from the end of September last year to January of 2025, we had Helene, 16 billion, Milton, 25 billion, Los Angeles wildfires, about $37 billion. Three of the costliest events in U.S. history, even after you adjust for inflation, happening in a span of 120 days. Okay, what does that tell you? Okay, that tells you that there's no end to this. Okay, there is no, unless we depopulate the coasts of America, unless we depopulate the wildfire areas of America, this is going to continue. It's going to continue. It's a question about how you manage it. That's a question. And so this is another loss that I know my friend here from the Institute for Business and Home Safety will be talking about this as well. I think he uses the same chart. But what you see, this is another way. These are losses measured in economic terms. That these come from the National Weather Service, and you could see how these have escalated as well. I showed you just insured losses. Obviously, economic losses are far higher than that. We saw that in the case of Helene, where many of those flood losses after the storm went north were not covered. Many people had no flood insurance. And we drilled down to Georgia. These are the Georgia-specific numbers right here, and the chart looks very much the same. What this shows is that both in terms of number and in terms of dollars, which is economic losses, Georgia is in the thick of the disaster trends we are seeing in the United States. If you want to get away from it, you're going to have to go to like South Dakota, somewhere like Wyoming, somewhere like that. Nobody wants to go there. Okay, but people ask me, how can I save on my homeowner's insurance? I say, go to Wyoming. No one's ever taken me up on it at this point. So, but this is what's happening. And so you can see charts like this all the time. I mean, look at what's happening. All these kind of tropical events on the coast and these major tornadic events and hail events and severe convective storms. So, up the middle part of the country, sometimes we have winter storms in the Northeast. All of these sorts of things, year after year, we have a map that looks like this. And you know, just because the first anniversary of this is coming up, I think end of next week or in about 2 weeks, this was the path of Hurricane Helene, right up through the middle of Georgia. Was a Category 1 storm pretty much till it got to Atlanta, and then exited the state as a very strong tropical storm. And so I know there will be a lot in the media over the coming weeks, you know, remembrances of this particular event. But that is part of what we are talking about here. And you see some pictures of that. By the way, it wasn't just damages to homes, a lot of damage to businesses, and a lot of cars got damaged and destroyed as a result of that. Both either they were flooded or trees fell on them. Now, to date, this was some great data from the last Blue Ribbon meeting. I just decided to borrow this, let's say, because this was current as of the end of last month. Total dollars paid by insurers to date from Helene as of late August, 2.86 billion, and estimated about 150 million or so more to be paid. So what that says is Helene came in terms of insured losses in this state at about $3 billion. $3 billion. And altogether, between the claims paid and outstanding claims, about 170,000 claims. $3 billion in this one state. And that was only about 20% of all the Hurricane Helene claim dollars paid. But that was a substantial share. It was, again, that made the top 25 list, right? All right, so here we have the newest lineup in terms of, you know, costliest tropical cyclone ever. And you can see way out here in 2024, you see Helene with a big chunk of all the losses in 2024. So Helene has made its mark in history. It's made its mark in history, being one of the costliest storms, tropical events ever. And so it's great data here put out. This came out from Swiss Reinsurance Group. I used to work for Swiss Re years ago. So and they put out great research like this. Now, in terms of, I told you that the insured losses are going to continue. It's absolutely the case. And you're going to hear more from, I think, IBHS about this in a little bit. But this data that came out of Swiss Re as well shows that, you know, if you compare the aggregate increase in losses from hurricanes and tropical events since the early 1970s, and that's represented kind of by this blue bar here, we've got about a 20-25% increase associated with increased hurricane activity. So the hurricanes themselves, the frequency and severity of those storms rising, that accounts for about 20 to 25% of the increase we see till today. This is just residential loss. But the vast majority of it, 120 to 130% increase from the 1970s is due to demographics, meaning more people in harm's way, higher property values associated with all those new homes and such. And so that has a lot to do with it. In fact, that is the majority of the reason. So it isn't that, it is true that there's been more frequency and intensity of storms, but it is the more people living in harm's way component that drives most of the loss. And the good news is that, and I think that we'll be talking about this, is that we can do something about it, okay? That we can invest in mitigation. In fact, the Swiss Re analysis shows that losses from hurricanes to homes would have been 60 to 65% higher than they are even today if it weren't for such things as strengthening of building codes and programs like fortified homes that IBHS, I'm sure, will be talking about, okay? So we're not totally helpless when it comes to mitigating the losses of the future. But decisions we make to live in harm's way, you know, there's ultimately going to be some sort of consequences of that. And so this is a data from IBHS, a report they recently put out. And what it showed, and I know they're going to talk about it, so I'm not going to dwell on it, but very, very significant savings have been demonstrated from their Fortified Hope program, measured against in the wake of a big storm that hit Alabama a number of years ago. So, but I'll leave it to my colleague there to talk about that in a little bit. Now, I mentioned demographics. The number one cause of rising catastrophe losses, at least from hurricanes, and I believe it's also the case for wildfires, is demographics. Georgia is among the fastest growing states in the United States in terms of population. Great place to work, great place to live. great place to retire. And, South Carolina benefits from many of those same things as well. And so just to give you some hard numbers to deal with. So here's what's happening in the Georgia homeowners insurance market. This is the top line. This is the premiums written. This is what comes in the door for insurers. And so we see the market, it was about a $2 billion market in 2010. 14 years later, it's about a $5.7 billion market. And in the last couple of years, we saw increases in terms of around 10, 11, 12%. Part of that is, the number of new homes that have been built. Part of it is higher limits associated with inflation and so forth. So limits have to be adjusted upward. And part of it was rate increases. So it's a combination of all of these things. Now, how about that population, that demographic? Well, over the period for the last 15 years, 2009 to 2024, the U.S. overall grew at about half a 1% annual rate. That's the U.S. Georgia grew by about 1.2% annually on average over the last 15 years, meaning the growth rate in Georgia in terms of population more than double that of the U.S. overall. So it wouldn't be surprising to see, piling on in terms of catastrophe losses, because these people have to live somewhere. They've got to live somewhere. In fact, where are they living? They're living in these places. This is the hundreds and hundreds and hundreds of thousands of building permits in this state. Okay, so 50, 60, 70 something thousand a year. This year through July, about 37,000. How many building permits are there in Georgia over the past 6 years or so? The answer is through July of this year, 423,545. And this isn't just for, although the majority of about 80% of these are single family units, these are for structures with multiple units as well. But it's one permit, no matter how many units. Okay, that's how this number. So we're talking about maybe even more people than this would represent. All right, so all of these places have to be insured. And when we look at the path of Helene, guess what? They're all exposed. They're all exposed. Okay, so now, another factor that most people don't think about when they think about, well, what drives insurance rates? Yes, obviously, catastrophe loss. That's one of them. Inflation, that's kind of obvious. We'll talk about that. But people don't stop typically to think about what actually determines the supply of insurance. What determines the supply of insurance is how much capital the insurance industry has on hand. An insurance company is not allowed to write, premiums, to write policies for which it doesn't have the appropriate amount of capital standing behind it. And so what we saw is, while capital, this is what we call policyholder surplus, essentially the net worth of the industry. And we see, while it generally tends to grow, it does fall back a bit every now and then. Dropped about 9% during COVID for a while, and then dropped about 7% as inflation began to soar in 2022. That was part of it. So insurers were capital constrained. That was part of it. There was less supply of insurance, and insurers simply could not. And so that was part of the reason why, not only why rate went up, but why in some cases, insurers were looking for people to take higher deductibles, or businesses to take higher deductibles, retain more loss, those kinds of things. And the same thing was echoed on reinsurance markets. Every single insurance premium written here in the state of Georgia, some share of it goes out to reinsurers, and reinsurers themselves also suffered a bit of a capital crunch in 2022. Now, we've seen largely seen that recover since. And that's good news, because what that means now is one of the major pressure points on rates for homeowners insurance and any kind of property insurance is beginning to ease a little bit. What this chart shows is this is a price index for property catastrophe reinsurance in the United States. And what it shows is, after 7 years of increase, including a 35% increase. So your reinsurers in this state faced an average increase in reinsurance costs of about 35% in 2023, I believe that chart shows, and that was like the 6th or 7th year in a row. And likely saw a decline early this year as of January 1st, and that seems to be continuing, and it looks like it'll decline as we get into 2026. So that's a bit of good news there, bit of pressure off. We can see the manifestation of some of the pressure insurers felt from the high underwriting losses, as well as some diminishment of capital. And so what we saw is a significant increase in the number of downgrades of insurers, particularly personal lines, meaning auto and home insurers, increased from 2022, where it was just 18 to 39 in 23, and it was still 31 in 2024. That is indicative of pressures on the balance sheets of insurers. Doesn't mean they were going under. It just means they were probably somewhat capital constrained. And that was the cumulative effect of inflation, high catastrophe losses, those sorts of things. Speaking of inflation, okay, as I begin to sort of wrap up here, as I mentioned, we hit highest inflation in 40 years in 2022. Cut it in half in 23, 3% last year. Everything to be stopped right now. We hope Federal Reserve hope to get inflation down to 2%. Looks like it's going to be stuck closer to 3%. But nevertheless, all of this factored into higher claim severities, not just property, but auto as well. Now, what I'm going to tell you is something that most people don't know, right, is that this number, as bad as it was, and as important as it was, say, in the 2024 election, it was way, way worse as experienced for property casualty insurers. So I'll give you an example here. This is the consumer price index, the number you hear about all the time. Okay, and from it increased 24% from just before COVID until June of this year, 24%. People were livid, rightly so, about the rate of inflation in America. Highest in decades, highest since the 80s. Well, inflation for construction materials wasn't up 24%, it was up 45% over the same period. Residential construction trade services, your carpenters, your electricians, everything like that, up 42%. What does that say? It says that inflation as experienced by property insurers was nearly double the overall rate of inflation that people were irate about, okay? And so this factored directly into property claim severities. Why? Because so many supply chain disruptions and such. Look at these sort of, this may amaze a lot of people, but look, over the same period of time from January just before COVID until June of this year, again, consumer price index up 24%. Something as mundane as plastic pipes up nearly 100%. At various points in time, lumber was up over 100%. So it's come back down. Steel mill products, copper products, drywall, gypsum, all these things up 50, 60%. Okay, those are the real numbers today. Those aren't insurance industry numbers. Those are official government statistics. Even shingles. A lot of shingles had to go on roofs after Helene last year. Okay, and look up. Those are nearly double the overall rate of inflation. And so overall, you could see what has happened to residential construction costs surging coming out of COVID, and then very recently starting to take another turn upward. Okay. And in fact, drilling in a little bit more, just the more recent months, you see a very distinct acceleration in residential construction goods, another leg up. This is largely due to tariffs. Okay, this is largely due to tariffs. So, so that has some way to run, and we know tariffs have been imposed on very basic commodities like copper and steel and many things that are used, and lumber that are used here in the United States. Household finishings inflation, these are the things, furnishings have surged recently. Again, a lot of this has to do with the tariffs. Many of these are imported. Same thing for household appliances, major household appliances. Your typical dishwasher, refrigerator has a lot of imported components from it in it. And you can see that surge in the most recent data. This is not yet manifesting in the claim severities. These are just in the last few months. But just in a 3-month span, we saw the cost of, say, appliances rise by nearly 4% in just 3 months. That's many times what the overall rate of inflation is. That is almost entirely tariff driven. And so you can see what's happened. We entered the year with an effective tariff rate was actually 2.4% in the US. We moved out into April and we had the Liberation Day announcements and a kind of little trade war with China. That fell down a little bit, and then tariffs were related, and many of them came online again in August and July as after some delays. So it'll be a while. It's actually going to be into next year before I think we start to see these in a material way in the claim severities. But the National Association of Home Builders said the tariff increased the average new home price by about $9,000, and so obviously it will be some sort of effect on home repair as well. So let me just conclude here and be happy to take some questions. Again, on the homeowner side, and again, we'll hear more about this from my friend from IBHS, but the good news is that after I saying there's no good news, there is some good news, and that mitigation is good news. And that we know that it works. It's proven it works. Strengthened building code, zoning, and then various types of construction technologies can really help reduce windstorm risk, wildfire risk, these kinds of things. I think that we're beginning to see technology has enabled people to have more and more information in terms of disclosure of risk. In other words, even on Zillow and other sorts of websites now, you can get a ranking of a property in terms of its vulnerability to wind, fire, flood, and sometimes other forms of risk as well. That's relatively new. And so you have more informed buyers, and hopefully homes will reflect those costs in the future. And again, we have to maintain a stable, fair regulatory environment that is conducive to attracting additional capital and new insurers into markets where there is going to be strong demand for insurance for decades to come. And Georgia would be one of those places. So thank you for your time, your attention. This presentation is already available on my website, and many others, uscriskcenter.com. Under the presentation tab, but I know that'll be made available as part of the public record as well. Thank you, Mr. Chairman.
Thank you so much, Professor Hartwig. We're going to put your PowerPoint on our committee website also. If you go to Georgia House, go to the committees, go to specialty committees, you'll get to the House Insurance Rate Study Committee, and we'll load it up there. And if you look back at our first meeting, we've got some of the presentations there. The one that says Bryce Rawson, that is from the Insurance Commissioner, and Steve Manders. Take a look at that one. And Bryce, you're here, right? Raise your hand. All right, Bryce Rawson from the Department of Insurance is here. Any constituent service needs or other regulatory issues, the Insurance Commissioner has a representative here, Bryce Rawson. All right, we have a question for the professor from Representative Williams.
Thank you, sir. You certainly took me back to school, but I was close to failing insurance then. I'm back now. Two very quick questions. You did not demonstrate the increase in premiums during these times of losses. And did you have a chart from 2017 to 24 to show the effect on premium payers during this period of time of losses for insurance companies? And second question is, you talked about the rapid rise in profitability in Florida that was very evident with your scale, but you did not mention that we've been told that premiums have not gone down. It'll be 2 to 3 years before they go down to catch up with the profitability. Why is profit so easy to report and premiums so hard to go down?
Well, because what we're talking about is kind of apples and oranges here a little bit. When, for instance, when we had the unanticipated inflation in all these building commodities, it went up 40% or so in many cases. So what we do is we move to a new level about 40% higher, and then profitability will lag behind that naturally because those higher costs are not built into the system when the inflation occurs. And then we tend to move to a new higher level. So what is happening when asphalt shingles go up 40% in price over the span of a year or two? Well, they go from, say, $100 to $142, but they don't go back down to $100. They stay at $142, or maybe they go up to $145 or $150, something like that. So you go to a new plateau. Insurers play catch up to that, but the price of all of these things, whether it's asphalt shingles or steel, insurers have nothing to do with that. They're always playing catch up to wherever they're going.
I think you misunderstood my question.
I think I
was not talking about the cost of material. I was talking about your graph that showed the quick, rapid profitability for Florida that leads the region. And my question was, as profitability rose and was able to be reported so quickly, why have not premiums come down in Florida? That was
again, the reason why premiums haven't come down is because of the fact that the underlying costs have not come back down.
But the profitability is there. You're able to show profitability. That incorporates all.
I believe, with all respect, I think I showed pretty poor profitability numbers for the homeowners insurance business here in Georgia.
Go back to Florida where you used.
Oh, in Florida, yeah, in Florida. So in Florida, yeah, my understanding in Florida, so they had a couple of reforms in 2022 and 2023. And my understanding actually is, yes, that Floridians are beginning to see some benefit of that in their rate in the form of perhaps being able to exit the state-run insurer of last resort and being able to have a number of companies competing for their business potentially at a lower premium than they were paying previously.
Okay.
Okay. Any further questions for Professor Hartwig? Chairman Gullett.
Thank you. Thank you for your time. I got two quick questions. I think the goal of underwriting, what is the goal of underwriting? Is it profit? Like is there a goal of making profit off of your underwriting? Or is the goal to be even roughly and make money off the investments? Or what is the goal of underwriting?
Well, the ultimate, so the first and foremost goal of underwriting is to assign a rate to every class of business that is sufficient to generate an appropriate rate of return for that class of business. In other words, we don't want, say, homeowners on the coast of Georgia being subsidized by people who live somewhere in the northern part of the state, for instance. So for that reason, underwriting is used, and we use different, so for instance, so the distance away from the coastline would be an underwriting factor that would help ensure that those rates are appropriate for people who live in one area versus another. So the idea is to have a rate that is appropriate and truly reflects the risk. And so, yes, generally speaking, an insurer will look to generate an underwriting profit, and particularly in a low interest rate environment, they will need to generate an underwriting profit because you're not generating that much off the investment income side. Even so, let me give you a sense of the overall property casualty insurance industry. Last year reached $1 trillion in terms of total revenue for the first time ever. The investment income earned by the industry last year was somewhere in the vicinity of 60 or 70 billion dollars. Okay, so it is a fairly small proportion relative to the premium that is actually collected to pay the ultimate losses. And so insurers also cannot assume that investment results that we saw in the last couple of years are going to be there in the year ahead. So for instance, 2022 is a very good example of this. In 2022, we saw a lot of unanticipated inflation, which was jacking up the claim severities. At the same time, they saw the value of investments fall as the stock market tanked and interest rates took a while to get up to where they ultimately were where the Fed was raising them. And so it took a while for insurers to generate additional investment income. That's a very slow process. So insurers do not operate under the assumption that they are going to be able to offset fully or completely any losses on the underwriting side, on the investment side. They can't operate that way because no one can know what the future state of the investment markets is going to be over long periods of time. The way I explain it to my students, all else equal over long periods of time, if interest rates are persistently higher, rates can be lower than they otherwise would be in a low interest rate environment. But again, generally speaking, they're going to operate such that they need to generate some form of underwriting profit, particularly in so-called short tail lines, which would mean auto and home, where there's not a lot of opportunity to generate investment income. Much of the investment income is generated in lines of insurance where the insurer takes in the premium, but the claims may not be paid out until over a period of years. Something like workers' compensation is a good example of that.
Thank you. I have one other quick question.
Sure.
Not really related to what you talked about, but I think you're very clued into this. What's a reasonable amount of time for an insurance company, in your mind, to approve or deny a claim for someone? Is there a standard out there for like, hey, a reasonable amount of time?
I believe that states, and probably somebody here could better answer this than I could, most states have a certain number of days where the insurer has to at least acknowledge the claim and take some initial actions on it. And, and I believe that's determined by statute in most states.
Outside of statute, because statute is made by us, you're a professor in the insurance world. What do you believe is an adequate amount of time for an insurance company to review a claim and make a decision?
Look, in my experience, for instance, I've seen enormous variations in what I would consider to be appropriate. So, for instance, in the case of a sort of a plain vanilla type of fender bender auto claim and kind of a small personal property claims, something like this, you're usually going to have the policyholder is going to call within the matter of days to initiate the claim, and the insurer is going to respond to that almost immediately, usually within, sometimes immediately within a few hours, or certainly within a few days. During times when we have, how many claims did I say? 175,000 claims like a Hurricane Helene. It can take a bit longer for an adjuster to come out, in part because obviously there are 175 claims over the span of a couple of days. Adjusters are being brought in from the state. But again, even my personal experience, I had my first claim ever with Helene, even in South Carolina, and I was able to I was able to speak to the insurer within 24 or 48 hours, and an adjuster came out about a week later in my case, and I was very happy with the way that it proceeded in my case.
So, say outside of a catastrophic event, I'm not sure how often a Helene is going to come through Georgia. Hopefully, not often. Normal 90 days, 60 days.
Yeah, I can't say, I don't have enough familiarity with, and I think statute is important, but I think, and also the mix of claims. For instance, I did a lot of work in New York on auto claims. And in that state, we only had, for instance, 30 days effectively under the law originally to close a ordinary auto claim. The problem is that fraud was absolutely rampant in the state. And what would happen is the claims would intentionally be tied up by unscrupulous attorneys and unscrupulous medical providers who would then attempt to sue the insurers for bad faith because it would take longer than 30 days to close the claim. In those cases, the insurers had a valid point in the sense that they were lobbying for 60 days to be able to adjust the claim appropriately. I think in that period of time, they wound up getting it up to 45 when there was strong suspicion of fraud. So it is claim dependent. And so I can't give you a firm answer here other than what is sitting in the Georgia statute.
All right, thank you.
Thank you, Professor. All right, let's turn back to the national slide, the slide with the map of the nation. I thought that was good to see sort of the big picture. Let's leave that one up there if we can rewind to that. But Professor, I really appreciate your testimony. Thank you for coming.
Okay, good. Thank you.
Really enlightening. All right, our next witness is going to be Ms. Hesselmeyer with DECRA. If you can make your way up here while you are, do we have Chairman Bruce Williamson online? Chairman Williamson, feel free to introduce yourself.
Well, hey, yes, this is Bruce Williamson. I'm the state representative for House District 112 in Walton County, Georgia. And I too enjoyed the presentation. It took me a minute to get the Zoom working, but I was, anyhow, glad to be on in the meeting.
Thank you, and we appreciate you joining online, and we know your many years in the insurance business will help us greatly on this committee. And Representative Williams, you had something from someone from McIntosh County who was going to come, but got sidetracked. So tell us what we're going to get from him.
I have a letter. I have a letter from Chris Harper, who's the Senior Vice President of Southeastern Bank, and he's outlining several things. Sorry he couldn't be here, but he had a funeral. But I have got his letter copies for each member of the committee. Thank you.
Thank you, and please tell Mr. Harper thanks for sending that from McIntosh County. Do we have the mayor of Brunswick, Cosby Johnson, here? Welcome, Mr. Mayor. Thank you for coming. All right. All right. Ms. Hesselmeyer.
Thank you, Chairman, committee members. My name is Jo Hazelmeyer, but I do go by JoJo. I am here today as the VP of Business Development for DECRA. DECRA is one of the world's leading safety solutions provider. We were established in 1925, so a long-running company. DECRA performs millions of inspections annually, so we definitely know the inspection world. Prior to beginning my role at DECRA, I spent 32 years in public service with the Texas Department of Public Safety, including the role of Director of the Texas Vehicle Inspection Program. I was also the Texas State Inspection Association Deputy Executive Director and am currently the Chair of the Texas Vehicle Inspection Advisory Committee. I appreciate the opportunity to speak with you today as a subject matter expert and as a longtime advocate for vehicle safety inspection programs because I truly believe safety inspections save lives. My role today is to simply provide you with data and perspective on how vehicle inspections not only save lives, but could help benefit consumers and businesses in Georgia with respect to auto insurance. I am providing testimony to you today to highlight some of the items that I feel are critical for you to make informed decisions. And while I would love to sit here and tell you about the perfect solution for high insurance rates would be to have mandatory vehicle safety inspections, I realize there are many factors that contribute to insurance costs, and asking for a mandatory vehicle safety inspection program is challenging at best. However, what I am suggesting is that you have an opportunity to offer a discount for those individuals who proactively seek a vehicle safety inspection. Anyone who has shopped for auto insurance is familiar with the plethora of discounts, everything from multi-policy, marital status, credit scores, certain technologies such as alarm systems or lane assist, student discount for good grades, as well as others. All of these are beneficial, but why not give a discount to those who ensure their vehicle is safe? It is mind-boggling to me that I can get a discount for being married, but I can't get a discount for making sure that my car has working brakes, lights, and tires that are not bald. Vehicle safety inspections are wins for everyone. Consumers win because the roadways are made safer, and financially, they could pay less on insurance. Insurance companies win because giving a financial incentive for a vehicle safety inspection could lead to fewer claims, reduce fraud, and overall save money. In the day and age when medical health providers, especially in rural areas, struggle with providing service, anything that can reduce the potential for any injuries would help to alleviate the burden on healthcare, which is a win. To support that vehicle safety inspections can gain the wins I just described, I want to point you to 3 studies. Also, if I've learned anything in my many years of working as a state regulator in Texas, it is that the legislature wants solid data and metrics. One of the known challenges for auto insurance is high medical cost. While a vehicle inspection doesn't control the cost of medical treatment, it can help reduce the severity of crashes that result in a need for medical treatment. A study published by CETA, which is a worldwide association of authorities and authorized companies active in the field of vehicle compliance, in 2022 suggested that states with an inspection and maintenance program, known as an IM program, had 5.5% fewer roadway fatalities per 100,000 registered passenger vehicles. This is further supported by the UT study as well. The Texas legislature mandated a study which was conducted by the University of Texas Center for Transportation and published in 2018. Crash rates and severity also contribute to high cost. I have included these studies as exhibits in my written testimony, but have taken an excerpt from this one to validate this statement. The average crash cost related to vehicles with defects are more than $2 billion per year. Most defects are vehicle elements that would have failed a program inspection. The frequency of fatalities, incapacitating injuries, and non-incapacitating injuries is higher for crashes involving vehicles with defects. The ratio of fatalities per number of vehicles in crashes is about 3 times higher for vehicles with defects than that of vehicles without defects. Crashes involving vehicles with defects are twice as likely to result in a fatality than crashes with vehicles that do not have defects. The most prevalent type of defect related to fatal crashes is slick or defective tires. Interestingly, 23.5% of survey respondents identified slick or defective tires as a vehicle element they had been asked to remedy during their vehicle inspection history, meaning that the fatality crash rate would likely be higher without such inspections. When vehicles from other states are involved in crashes in Texas, the percentage of vehicles with defects is found to be lower for those states that have vehicle safety inspection requirements than states that do not. This indicates that the inspection program in general may help reduce the number of defective vehicles on the nation's road. Ensuring that the vehicle owner remedies the defects found by law enforcement, officers during roadside traffic stops can enhance highway safety. Vehicles with defects that were involved in crashes are 3 years older than the average registered vehicle, which is 9 years old. In other words, the percentage of vehicles with one or more defects that had crashes is higher for older vehicles. This highlights the importance of the inspection program to make sure that key components like tires, brakes, lighting of older vehicles are in good condition. Some other benefits are higher costs for repairs due to technology. So inspections that allow for preventative maintenance by identifying problems which can be addressed sooner. Early detection allows the owner to have the issue resolved quickly at a lower cost, like the medical world, where early detection can lower the cost. Another benefit is too many uninsured drivers. If insurance was mandatory at the time of an in-person inspection, then this could help reduce the number of uninsured motorists. Also, common sense would dictate that if insurance were more affordable, then more people would not have to choose between auto insurance and other daily living expenses. And the last benefit I'll speak about is insurance fraud. So in September 2024, Value Penguin published statistics about insurance fraud. In the report, they cite a study by Verisk in 2017 that insurance companies lost $29 billion per year due to insurance fraud. Vehicle inspections conducted in person by qualified expert inspectors would help to reduce the opportunity for fraudulent claims. Some examples of auto insurance fraud include incorrect odometer readings or claims for repairs of items that were not damaged in a crash, but were in fact due to daily wear. It is a complex issue, but I would submit that there are opportunities for improvement through vehicle safety inspections. Some of the major insurance companies do require some form of an inspection prior to issuing a policy, but generally it is not periodic and not necessarily by an expert that can truly evaluate the vehicle to ensure it is roadworthy and safe to operate. Most allow self-reporting and do not look at safety components such as tires, brakes, working lights, etc. The studies referenced focus rely on the safety aspect, but you can also draw a correlation for the effect a vehicle safety inspection has for insurance. Out of respect for your time, I've referenced 2 publications, but there are some others, such as a study by Carnegie Mellon University in 2015 and various recent articles on the topic of auto insurance fraud. Including an auto insurance discount option for a vehicle safety inspection is a common sense approach and a step in the right direction for public safety and consumer financial benefit. Thanks for your time.
Thanks, Ms. Hesselmeyer, and look forward to getting some follow-up from you on the inspection, potential legislation with you and Mr. Dunn, and also insurance fraud. Since you know about that also, please give us some examples from other states who were effective on insurance fraud. The insurance commissioner mentioned that's something we need to step up in Georgia to stop the fraud. So I appreciate you coming in and shedding light on this. Any questions? All right, Floor Leader Hong.
Thank you. Thank you for your presentation. How much does a safety inspection cost?
Are you talking about cost to the consumer?
Correct.
So in Texas, it was $14.50. So the state kept $7, and the station that performed the inspection kept $7.50. So it was $14.50 to the consumer.
$14.50?
Yes. Correct.
And you had mentioned that some insurance companies require these inspections before they, did I hear that wrong?
Yeah, not necessarily these types of inspections, but some type of inspection. I know, like for my insurance company, I just send them a just a photo with my phone of my odometer. So various type of an inspection, but not necessarily what I was trying to convey is not really the type of inspection I'm referring to, where you bring the car in and we look at the tires and measure the tread depth and we check the brakes and see if they're functioning properly and look at the lighting. Most insurance companies are not looking at those types of elements if they do anything at all.
And I'm sorry, my last question, are there any states that have it where they're giving discounts for these inspections?
Not
Do you
that I know of,
Okay.
not that I'm aware of.
All right, thank you so much.
You are so welcome.
Thank you for coming to Georgia.
Thank you.
All right. All right, Mr. David Pattison, got a local insurance businessman. The speaker, when he got this committee started, he said, get out in the state, go listen to people, let the data drive the policy, and call David Pattison. So great to have you here.
So thank you, guys. My name is David Pattison. I'm the president of Sterling Seacrest Pritchard. We are based primarily out of Atlanta, but have offices in Columbus, Savannah, Tampa, Little Rock, and Birmingham. And we're an insurance agent, so we're not an insurance carrier. We don't set rates. We represent the clients, and so if you come in and you're trying to get homeowners insurance or auto insurance or whatever, you would talk to one of our agents. We would shop it to various different markets, and so we would try to help you place your carrier, your insurance with somewhere. That's very different than State Farm or Allstate, which are what are called direct writers. So when you are working with them, they are the agent and the insurance company. So we don't take any, we don't have any insurance. We just represent the customers. So what I'm here today to talk to you about is the insurance marketplace in Georgia. And what I mean by that is, what do our customers who are shopping for either business insurance, personal insurance, or their homeowners, what are they experiencing trying to get that insurance placed in this day and age? And you saw a lot of data about, the claims and the cost and things like that. But most important, as legislators, what you want to worry about is the supply and demand of insurance. So if I'm trying to buy something, how many options do I have? And if I only have one, I don't have any control over what the price is. I just have to take whatever that one carrier is doing. So Georgia, I've been here for 40 years in insurance, and we have had the great distinction of, for many of those 40 years, being a very competitive marketplace. So, and things make a competitive marketplace. One, the storm are a part of it. Two is the vehicle traffic. Three is the things like natural disasters, things like that, and also the legal environment, right? So what has happened here is we do have tough environment because of the storms and things like that. And you saw that in the personal lines, but what I experienced, that's just kind of natural disasters. And the state legislature can't really do anything about that. That's just claims and storms and premiums. But what the state legislature can control is the environment that it makes it easier or harder for people to buy insurance. So when you have insurance carriers, they're filing rates and they're doing things, but they're also making a bet on the future of our state and the environment that they're trying to do business. And so if they don't feel as though it's a competitive marketplace, or they can't earn a reasonable return for their shareholders, they'll just move to another state. So for the first time ever in probably 2022, and we deal in all 50 states, it was the first time ever that as an insurance agent, if I told the insurance carrier that I was dealing with, and they might be in Detroit, they're not, they might be in New York, they might be in California, that my insured, the customer, the paying customer lived or practiced in Georgia. It was the first time ever that they said, no, we're not interested. It's not a good state for us. And I think that's the thing. We can talk about tort reform, we can talk about claims and storms and things like that, but the most important thing from our legislature is we need to have a fair and balanced marketplace where people feel as though they can come and deploy capital here, because they have a choice at 50 other 50 other states. And you saw that if we're the ones that are at the wrong end of that field, then they're just not coming here. And the way to lower insurance premiums, so we can talk about rates all day, but the most important thing for the consumer is what their premium is. And the premium is a function of what their next best option is. So if I'm with the Travelers Insurance Company and my premium goes from $1,200 to $1,400 because of whatever, the house costs more, the rates are higher, whatever. Like, I don't have any option as a customer unless there's a competitive alternative. And the only way we're, as a state of Georgia, going to get a competitive alternative is to make sure that the rules and the regulations that are promulgated by our senators and House and governor are fair to all concerned. And that's the important part. If there's ever an imbalance, the marketplace will tell you. And Georgia, in my 40 years, has always had a fair and balanced marketplace, and people wanted to deploy capital here. They wanted to write coverage. They wanted to provide competitive alternatives. And for the last 5 years, I've had to tell my clients, I'm sorry, you're lucky that the people that you have right now will renew your coverage, because we don't have anybody else who's willing to take a bet on Georgia. And as citizens and legislators, that's almost like, I'm almost embarrassed that we can't keep our house in order enough to be a fair and balanced place to do business. So I'm here to answer questions, because I can tell you from a consumer standpoint what they're experiencing. I can also tell you from the insurance carrier standpoint kind of where their heads are and why they are not really excited about doing business here. So I thought it was just important for someone to talk about the marketplace versus rates and competitive alternatives, and how the consumer is actually physically impacted, and not just a small auto policy. Like, the thing that our state has to be most concerned about is the businesses that work here. I've got plumbing contractors, electrical contractors, they're paying $4,000 a year for auto insurance and per car. And that was $2,000 a couple years ago. And I'm sure Dr. Hartwig could tell us all the things that go into that, but even at double the premium, I don't have anybody coming in saying, hey, I'd love to write a plumbing contractor's truck for $4,000. They just don't want anything to do with it. So with that, Mr. Reeves, I'll yield to questions.
Thank you. Any questions for Mr. Pattison? Representative Williams.
Thank you, Mr. Patterson. Many years ago, when Moses and I were in the insurance business, there's always been difficulty with certain lines. I live in a timber heavy area.
Yeah.
You never could get good deals for pulpwood trucks. And there were a lot, but this is nothing new. It's always been difficult, certain lines, to be insured. Now, I didn't like it then, don't like it now, because I wanted to sell insurance. But what has changed?
So in those days, because I dealt with a lot of logging companies and we had pulpwood trucks on the road, there were a lot of laws about what pulpwood trucks had to do versus what regular trucks had to do. And it wasn't as much. So talking about the inspections and things like that, the legislation and the requirements on pulpwood trucks were lower. And so there was a higher level of failure related to brakes and safety and things like that. And I think that's what kind of caused a lot of trouble there. But now it's not really just a segment of the market. So it's not just the pulpwooders are having trouble or just the tractor trailers, it's everybody. So it doesn't matter if you've got a F-150 or a F-550 or a dump truck or a cement truck or whatever, it is universally difficult to get any kind of liability or umbrella in the state of Georgia because of the lack of availability.
Thank you, Mr. Pattison. Chairman Gullett.
Are there any states who are attracting a great marketplace right now? I know, inflation's happening everywhere. Replacing parts of cars is happening everywhere.
Yeah.
As far as the increased costs, labor costs increase is happening everywhere. So what state is doing this well
So I think
and
if
why?
in Dr. Hardwick's presentation, you saw, if you looked at kind of the general averages of the premium to loss ratio, that's what the carriers are looking at. And they're going to go to a place where, there are less storms, there are better highways, there's less traffic congestion. The legal environment is different. I mean, it just depends. Like that's what they're looking for. So the insurance transaction's tricky because it's a spot market purchase for a futures market obligation. So I'm having to price something today that might not pay out for a year or two or three. So if there's inflation, there's an interesting statistic. 1 point of inflation requires me to increase my rates by 6 to 7% just to cover 1% of inflation for the future, just because of the cost of things going up. So that's the tricky part is we have to, everybody's got issues related to, to clustering of homes in tough areas, whether it's tornado exposure, whether it's river flooding. We're interesting because we've got essentially two coasts. We don't have a coast on the south end of things, but we're very susceptible to storms coming up through the Gulf. And that's been kind of the strange thing. People used to worry about everything coming in from the Atlantic. Everything that's happened to us bad in recent history has come out of the Gulf. So I think the carriers are having to look at the exposure to Georgia differently now. But there are plenty of places, Tennessee, Alabama. Alabama used to be the bad. I mean, they're like, when we were Georgia, we were like, well, at least we're not Alabama, Louisiana, or South Carolina. They were always worse places to do business than here. Now we're worse than they are.
So what about, so we did just have tort reform. Have you seen, and that was effective on the governor's signature, so that's been to effect for
Yeah, so
6 months or
as I
so?
talked about, the insurance transaction takes a long time to play out. So the claims that will be affected by tort reform largely haven't even happened or been reported yet. So for an example, an auto insurance liability claim, there's a 2-year statute of limitations, and a lot of time it won't even be reported until the end of the 2-year statute. And then it'll be litigated over the next 2 to 3 years. So as an insurance company, I don't know how the tort reform has affected me until that claim plays out, which could be 3 to 4 years. Now, what I will tell you, and this is what I told the speaker, for the first time in 5 years, because we did tort reform, carriers are willing to take a bigger, longer-term bet on the future of Georgia versus the past of Georgia. So I think that's the important thing for the legislature to know, that there are people coming in saying, okay, Georgia is one of the model states in the country that's dealing with, and tort reform is a tricky word. Legal system reform is, I think, more important for people to understand. And there's, and I'm certainly not here to tell you that my customers should be deprived of their ability to be fully compensated for their claims. But at the same time, we get measured against other states, and our court systems and the trial verdicts get measured very, very closely. And we have become a very difficult place for carriers to predict what the future looks like.
Thank you.
Thank you, Mr. Patterson. Definitely as a independent insurance broker, and I see John Barber here also, definitely the door is open over the next few meetings. If you see some good models from other states that we ought to consider here in Georgia, definitely send it to us. Also, back in Metro Atlanta, December 18th, we have a meeting in Gwinnett County. I know you've got some good Georgia Bulldogs at your firm. Send them to testify and bring some ideas, and also to bring UGA's insurance and risk management to that meeting. We've heard from Georgia State, South Carolina. I know UGA's got a lot of insurance knowledge there.
Best thing we have in the firm. So those athletes, they're old and they're tired and they're gray. They can't throw a football. We have UGA. So Charles Seiler works in our office, so it'd be much better for him to testify. I think people like to hear from him better.
Let's see. David Buhaker.
Good afternoon, ladies and gentlemen. Thank you for having me here to testify in front of the committee. My name is David Buhacker. I'm an attorney from Atlanta, and my practice revolves around what we call first-party insurance. In other words, I represent insurance policyholders when they have a loss and they're trying to help navigate the system, or they need help navigating the system. I represent all sorts of policyholders. I represent individuals, homeowners. I represent commercial claims, institutions, churches. It just runs the gamut. If you have insurance policies, you need help with them, that's the kind of work that I do. We're here talking today about insurance, but also we've been talking some about storms, Hurricane Helene. Today is September 19th, Friday, September 19th, 2025. Next week will mark a year since the storm. And a lot of people don't know, a lot of insureds don't know that next week on Friday, their legal rights run out. Sometimes your insurance policy has a provision in it called a suit limitations provision. It's similar to a statute of limitations, which people are familiar with. But a suit limitations provision is a creature of the contract, and it can be as short as 1 year after the date of loss. So the professor was showing us some statistics about the number of claims that were out there from Hurricane Helene, some of the number of claims that are still outstanding. Some of those folks might lose next week their right to legal redress, and they don't even know about it because it's contained in that policy. And it can be as short as 1 year from the date of the loss. Okay, so that's not just 1 year from the date the claim was denied. That's 1 year from the date of the storm. So you could be going on 6, 7 months after the storm, still trying to negotiate with your carrier. You don't even know that you've got a claim that could be potentially maturing until maybe 9, 10 months later. And then you're looking at a 1 year date of loss coming up on you, and you've got to figure out quick what to do about your legal rights. So that's part of what I'm here to talk about today, is the perspective from a policyholder on the ground as far as what he or she is dealing with, because insurance, especially from a claimant's perspective, is very complicated. There are other lawyers in this room that have had claims. I'm sure there are people on this panel that have had claims before and have been just completely befuddled by the whole process, because it's its own language, it's its own system, and a lot of times it's set up to be confusing. It's set up to be longer perhaps than it should be. I'll give you an example. I have a number of clients that I was actually discussing with my paralegal on the way down here today that I'm planning on filing lawsuits for here in the next couple of days. One of my clients had a tree fall on his house, and we saw a couple pictures from the professor about a tree hitting the roof. This tree destroyed my client's roof, and it separated it from the walls of his building. And if we remember Hurricane Helene, this happened in the middle of the night, and there was a giant storm, wind, rain, so the tree hits. His entire family has to flee next door, and he's got a giant gaping hole in his roof that the water's coming in through for the next day or so. He has still not had a final claims decision made on his claim, and next week marks a year. And he hired me, I believe, back in February of this year. And I have been negotiating and trying to help him through the Byzantine process of trying to get his claims adjusted. In that time, I've helped him. We have submitted hundreds of pages of documents at the insurance company's request. Anything having to do from receipts and invoices for what he spent during the storm, to repair receipts and estimates, I should say, from contractors to get the work done, to receipts to show where he was living and what he was paying while he was out of his house, to credit card statements, hundreds of pages of this stuff that we submitted at the request of the insurance company before we went in to undergo what's called an examination under oath. And if you don't know, your insurance policy has provisions in it. It has duties that it imposes on the insured. One of those duties is to basically cooperate with the insurance company, which sounds innocuous, but that gives the carrier the opportunity to request a whole slew of documents about anything: tax returns, old expenses, receipts, estimates, invoices, photographs, videos, anything that they feel is necessary to adjust the claim. But also what happens is it drags out the timeline for adjustment. So I worked with my client for months to get these documents produced. additional months to sit down and go attend this examination under oath because we had to provide the documents in advance. And for those of you that may not be familiar, an examination under oath is like a deposition, okay? But it's not, there's not a court proceeding. I submitted hundreds of pages of documents on behalf of this client. We sat down for this examination under oath that lasted all day back in June, and we're still waiting on a claims decision. So I think that's reflective. We've heard a lot about rates and things, this catastrophes affecting everybody. I think we need to look also as well as the more human element of this. What about the people that are affected by these storms? What's going on with them? What's happening as far as the delay, the interminable request for documents, for additional information, no decision being made, going on and on, all the while that 1 year limit is creeping up on him. And if he didn't have me, he wouldn't know about it. Most people don't know about it. You don't get a warning about it from your insurance carrier because you're presumed, everybody in here is presumed to have read your policy. You got that? That 60-page policy that you bought for your insurance, you're presumed to have read and known everything about it. So I wanted to come before the committee today to talk about some of the things that I see and that I hear from the people on the ground that are affected, that call me when they're at their wit's end and they don't know what else to do.
Mr. Buhacker, let's take a break real quick.
Yes, sure.
We are honored to have Speaker of the Georgia House, John Burns, here. Let's welcome Speaker of the House. Mr. Speaker, the floor is yours. No, well, we want to hear from you.
Sure.
Am I good right here, Mr. Chairman? Mr. Chairman? A lot of chairmen right here. Hey, Al. Glad to see you from Liberty County up here. So, welcome to all of our colleagues from Emory. What'd you do?
I did not get Elaine a cup of coffee when she asked.
No, well, good for you. I'm sure you've learned your lesson. It's good to be with y'all. It's good having all the friends from around this room in Southeast Georgia. It's part of God's country, Sue. I'll just tell you that now. So y'all seen a lot going on down here in this great hospitality in Savannah. House District 159 is about an hour up the roads where I live. So we're always glad to come to Savannah and be a part of everything here, and certainly a great place to have a meeting. Hope y'all enjoy yourselves here while you're here, as well as our guests and all those participating. So I'm excited about the information y'all are gathering for through this process, and it's one of those things we do that with our study committees, especially special study committees that bring information together that we can take action on if action is required. Certainly, we had a robust session, as we all know, in this year, 2025, and one of the big issues we took up certainly was tort reform, and certainly bring some balance back to that issue. But also, we as we complete that, we also know that we would like to bring some balance back and take a deep dive, you will, leave no stone unturned, as into the insurance industry, ensuring the transparency for our customers, our ratepayers, hardworking Georgians there, working with it. I thought I saw the commissioner over there. I know he's testified before y'all previously, and we've got some ideas that he would bring forward that may be beneficial for him to accomplish his work as insurance commissioner. So we appreciate Commissioner King and what he's been doing and what he looks to do. So certainly those are ideas that I'm sure that this committee will take a hard look at and see if there's anything that may require action from the House. I'm sure y'all have had a robust session today and hearing great information and some great suggestions. I already got one of them when I walked in the door out there. So there's some good ideas out there. And I think that's what we do in the House. I know that's what we do. We gather the facts, and then if action is required, then we take action. But we take action when it's certainly we have the all of the information from every side of an issue to do just that. So, Mr. Chairman, I know you've been doing that. I know that's what you do for a living, and we appreciate your how many times have y'all met?
Mr. Speaker, this is our second, and we've got 3 more.
Second time. I thought this was your second. So I appreciate what y'all are doing. I know something about your first hearing. So we're looking forward for y'all to continue doing what you're doing, asking probing questions of folks that are presenting and folks in the audience that we can do just what we do. And that's always bring forward good legislative fixes if necessary to take care of Georgians, because we all know that we all pay premiums, whether it's quarterly, semi-annually, annually. That's part of whom we are to protect our property. And so we will look forward to continue to work with the insurance industry to see if there's anything we can do to assist that industry that will reduce premiums on Georgians and still provide the best care level of support and protection for all of our folks in this state. So I know that's what y'all are doing. That's what we expect you to do. And I feel very, very certain when I look around this room and look at the list who's serving on this committee, that you're going to do your jobs and you're going to do just that. So I'm very appreciative of that. If I may say one thing, a little bit divert briefly, because I know you have a schedule. So we're very proud of the progress in Southeast Georgia, especially, and y'all have seen some of it as you drove down or you flew down. You saw some of that progress, and along with those that great progress comes great challenges. But so we have another issue now. We have some closures down here. Al and I have been talking about it, along with great challenges will become great opportunity. So I want to just say to all of our colleagues, Al, in the House, that understand the issues in the timber industry and the pulp and paper industry, and those closures that have impacted about 1,100 direct jobs in Savannah and Riceboro in that industry, that we're going to, and about 5,000 jobs, 4,000 to 5,000 jobs, indirect jobs in this area that support that industry. We're going to bring solutions to the table, and we'll bring those to you all. There'll be short-term solutions and long-term solutions that can impact that industry and protect the livelihoods of so many Georgians that are impacted in the timber industry. And so there's also a component, as many of these folks know, with insurance in that industry as well, that has a major impact on the cost of working and the cost of production in that industry. So those are all sorts of things we can look at. And I hope y'all will do just that, with a focus on a lot of little things that are important to all Georgians. Thank you for letting me be here. I'm gonna hang out for a little while, if that's okay, Mr. Chairman.
Absolutely.
I'll see if
Mr.
I can get a
Speaker.
per diem. I'm not sure if I can.
Thank you. We got the sign-up sheet right here. I know Representative Williams wants to say something. Let me just say thank you for blessing us with your presence. We know you had a lot going on in Effingham County and then Statesboro, and it means a lot for you to come here. And also this panel, we got 50 states. It's a national problem. I don't know of another state that has a speaker who's put a committee with the task of looking at this for 5 hearings leading up to session. Thank you for the leadership. People of Georgia want some results in this area, and you put your finger on something that we're hearing a lot about from our constituents. So thanks for your leadership.
You've got some great members on this committee.
One of them's itching to talk to you. So
Yes, sir.
Representative Williams.
Thank you, Mr. Speaker. Certainly, we want to thank you for your leadership. After 1,100 people directly lost their jobs and another 4,000 or 5,000 adversely affected. While a lot of folk were doing a lot of talking, you're trying to plan to find a way forward. Very important to my constituency and those certainly affected in the Savannah area. And we appreciate you, and we appreciate the continued effort, and we'll continue to talk.
That ripple effect extends all the way down the coast and very far inland. So we're gonna do our jobs, and we're gonna look for solutions that in the short term and the long term that helps these folks, helps our neighbors out. So thanks. I appreciate working with you, and certainly all of the folks, and some folks in this room we're working with on that same issue. So thanks to all of them as well too. Thanks, Mr. Chairman.
And Mr. Speaker, Representative Williams said that he spent some time with Moses a while back. And if you got one of those picture Bibles, Moses is the one with the long beard. He's the snappy dresser.
All right, you must have seen the picture.
All right, Mr. Buhacker.
Thank you. I appreciate it. The only point that I wanted to drive home about my client that I was still talking about, which I think is typical of a lot of people's experiences after the storm. Like I said, it's rolling on a year. He doesn't have a final claims decision. Recently, he was forced to sell his house. He had to sell it at a major loss, and he couldn't do any of the work that was necessary to be done, so he had to sell it to a speculator. And this was a house that he lived in with his parents, his sister, and his grandparents, and he was the primary person that was taking care of all of them. So it's a real effect that happens and that I hear about unfortunately, all too frequently. So with that, I'll take any questions, anybody.
Thank you. It looks like we will have some questions. My question is, can you get us some templates from some other states that you think have some good models to follow? And then also particularly named storms, tropical storms, hurricanes, where you have a mass number of claims. Are there some good templates for us to consider in Georgia for some of the mass casualty situations.
Sure.
All right, let's see. Questions from the committee. Representative Kelly.
Thank you, Mr. Chairman. Mr. Buhager, thank you for being with us. When we're talking about these periods of time where claims must be initiated or finalized, are we only talking about property damage with this?
Well, yes, we are in this instance, yes, because the period of time that I was talking about is in the contract itself, okay? If we're talking about a car wreck or a personal injury kind of thing, that's a statute, right? You have 2 years pursuant to statute. In Georgia, if it's not otherwise in the contract, you actually have 4 years to file suit if your property has been damaged. But the law is such that a carrier can reduce that 4-year time period all the way as short as to a year, as long as it's in the contract. And so that's the time period I'm talking about. It's not a creature of statute. It's not a right that people have that comes from the law. It's strictly from the contract that they don't even know about until and unless they read it. And most people don't.
Are we seeing this in other states? I mean, is that something that our surrounding states, are they doing this implementing this policy in other states surrounding us as well?
There are some other states that have the 1-year limit, but there are others that have 2- and 3-year limits. I believe in Florida, they even have up to 3 years after the loss, for example. So other states treat you, if you change the statute, you could change the rule, because here's something interesting. This Hurricane Helene that we've been talking about was obviously a hurricane. If you have a fire, you actually have 2 years from the date of the fire to file your lawsuit, even if your policy says it's 1 year. And the reason for that is because the statute says, in the case of fire, you must have 2 years to file suit. That could be changed, but since it's not, since it doesn't apply to non-fire losses, it can be as short as a year.
The other states you talked about, Florida, that's 3 years. Is it statutorily set 3 years with a provision that says it's a matter of public policy that you can't shorten it contractually? Is that how they address that?
I believe it is, but I'm not a member of the Florida bar, but yes, I believe it is.
What about Alabama?
I don't know about Alabama. I can get you that information. What's that?
Thank you.
Yes.
Representative Williams.
Thank you, Mr. Chairman. Thank you for your testimony. And I wanted to emphasize to those on the committee to please read this handout that I passed out from Chris Harper. Chris is Senior Vice President of Southeastern Bank. And by the way, he was a big proponent of tort reform. But you need to read what his concerns are. And he has named some people and some of the problems he's having now that he'd never seen in 30 years of banking. You should read about Chris from Darien.
Chairman Gullett.
Thank you. Thank you for your testimony. Have you held, well, the very first meeting, we had the insurance commissioner talk about a portal for complaints, consumer insurance complaints. Have you ever helped a client submit something to the portal?
I have helped numerous clients submit things to the insurance portal, yes.
Okay. Can you tell me about the process and what, in your experience, has happened when you submit something to the portal?
Sure. So the portal provides an opportunity for either a person, an individual, or their lawyer to go on to the portal and essentially make a complaint against an insurance company for a particular claim. Then I believe the process is that the carrier has approximately 15 business days to be able to respond to that complaint. My experience has usually been that when a complaint is filed, the carrier will bump the claim up, if you will, to a claims supervisor who then looks at the decision made by the adjuster and essentially rubber stamps it and sends a letter to the insurance, Department of Insurance that says, carrier XYZ has said they've done nothing wrong and paid the claim entirely like they should have. We consider this matter closed. And then it's pretty much, we have to have a discussion with the client about, do you want to file suit or not at that point?
Have you ever had the claim, have you ever had things change? Have you ever been successful, I guess, making a complaint on the portal?
No.
Not one time?
Not in my experience. I mean, not with me, no.
Any other questions? All right, Mr. Buhacker, real quick, Bryce Rawson, raise your hand again. Bryce Rawson with Department of Insurance is here. In addition to the portal online, there are 180 portals, with House members, and, Bryce is the, constituent service, director there. So y'all talk afterwards, to connect with him, but definitely House members, that's part of our job too, and following up on these claims. I know Augusta and other places hit by the storm, there's been a lot of work with follow-up, and appreciate you bringing these issues here, but definitely get to know, Bryce Rawson with the insurance department. Thank you.
Thank you all very much. I appreciate it.
All right, next speaker or group of speakers, I want to thank Representative Lehman Franklin from Statesboro for identifying some issues on auto repairs. He has brought several business people here knowledgeable about this issue, including Michelle Combs from my area up in Gwinnett County. So Representative Franklin, I'm going to let you introduce folks to the committee to shed some light on the auto repair issue as it affects insurance.
Thank you. I appreciate it, Mr. Chairman and members of the committee. I really appreciate the opportunity to speak here and to have my friends come up here to share with me, and Speaker Burns as well for putting this committee together. I really think it's needed, it's important, and it's a big deal for Georgia. So thank you for doing that. So I'm standing here today not as a representative, but as a businessman. So I'm going to take that hat off, and I'm going to be a businessman to you here. And I want to share with you a little bit about what I've experienced, what I've learned, and just kind of what we are experiencing within our industry. I'm a new auto dealer on one side, but I'm also a collision center owner. So I own a collision and body shop in Statesboro, Georgia. And I just want to share with you a little bit of the concerns and how the process goes so that you're familiar with it, because I don't think that the majority of the public knows exactly kind of what goes on. But I am not the expert here. These guys here are the experts. They are all members of GCIA, which is the Georgia Collision Industry Association. They're all owner operators. Collectively, they have experience of about 100 years together. Some of them are multi-generational collision center owners, and they bring a wealth of knowledge. So please ask them as many questions as you can. And I'm going to bring them up to talk in detail about it. But before I do that, I just want to give you kind of an overview of some of the areas. And this is not to point fingers or anything, but it's to bring light to an area. And I was really encouraged because the first three speakers that came up here really are arguing my case, basically, or our case. And you see the flyer that we put out here, there's 3 points in here, and they're going to go into detail with it. But the first three speakers gave a good foundation of a good starting
Real quick,
point.
Representative Franklin, is that the 2-pager with the QR code on page 2?
That's right. That's exactly right. So to give a brief summary, this is what happens when you have a wreck in your vehicle. You have a wreck, you make a claim, you go to a body shop or a collision center. They look at it, and every vehicle that comes in there has a standard practice that is presented by the manufacturer, whether it's a Toyota, Chevrolet, Buick, Ford, whatever. That manufacturer tells you or tells the collision center a list of things that need to be done to be able to repair that car safely and correctly, to be able to return it to its proper working order in that vehicle. So we write up the estimate, we put the repair together, we send it in to the insurance company, and it says, you know, this car, the manufacturer is saying it needs A, B, C, and D done to it. When we do that, the majority of time, if not 100% of the time, the carrier will come back and say, I will do A and B. I may do half a C, but I'm not going to do D at all. And so that collision center operator has a choice then to either do exactly what the insurance carrier tells them to do, the A, B, and then return it to the customer, or to do all of it, eat the cost of it, and or try to get it back to the customer. So more times than not, you know, we do the job complete and we do it right. My shop, for example, does it right. And if I have to eat it, I eat it. But we do it because it's a safety issue. And that's one of the points I want to harp on. It's a complete safety issue. If you don't do that, then the carrier's not going to be held liable. The body shop will be held liable if something like that, if they have a wreck or they have a situation in the future. And these vehicles are getting more and more technical. We have to do, there's sensors all over the bumpers, you know, they're all like little spaceships now, basically. And you have to check all that stuff. A lot of these things aren't being cleared by the carriers. So one of my main points is that all that stuff needs to be done for a safety issue. The other point that I want to make is that, you know, Georgians are paying a premium for this product. And they're not getting, a lot of times, they're not getting that product in full. A lot of times they're getting half the product because the corners are being cut. And there's a problem that we need to fix. So I want to let these guys talk about it, and they're going to go down this list and they're going to go in detail with it. But that's kind of the overview of what the situation is. Now, the solution to it, I don't know, because we got up here on the first slide and everybody's losing money and all this kind of stuff. And I'm not saying that. But what I'm saying is that we need to find a solution to be able to protect the Georgia consumer, and to also, if they're paying for that product, to give them the product, or don't charge the full amount for that product. So just real quickly, on point number 1 that I have up here, I forgot the lady's name that came up, but she was talking about the percentage of defects have run higher, and she was talking about the inspections, right? Well, that could be easily addressed by making sure that all of the cars that come into the collision center are done according to the manufacturer's policies, the A, B, C, and D, that they're completely done. That would eliminate a lot of issues, a lot of defects in the cars, because I guarantee you right now that's not happening. A lot of those cars are getting repaired, halfway done, and those defects are going back on the road. The number 2 issue is the professor that came up. I forgot his name, the first guy that came up. But I was happy to hear him say that he said, with his knowledge, that he thinks a bumper, a repair to a vehicle, whatever, shouldn't take more than a couple of days. That's great to hear. Because a lot of times in our industry, it's taken more than 20 days to get an assessment from a carrier to come out. What that does is it creates more cost in the rental bill. It's more delay for the consumer. They don't have a vehicle, for one. And a lot of times the carrier only pays 3 or 4 days for the rental, and we end up eating that cost, which is fine. We'll do that as long as it's safe. But there's no need to it if he thinks we can do it in 2 or 3 days. That could be an easy fix in the future. The last one, number 3, Mr. Patterson, I believe it was, he mentioned that he's an agent, right? He's not a carrier. I used to be an agent. I was an Allstate agent. I still have my license. So I have a great sympathy for the agents. And I want to work well with the carriers. But he mentioned that everything needs to be fair for all concerned. I couldn't agree more. Absolutely. And that addresses number 3 that we have down there. If we have universal standards across the board, you're not going to have the situation that we have now. One point in saying that, so when we fix a car and they say we'll do A and B, we'll ask them, why don't you do C and D? And they'll tell me, basically it's just because is the answer, but they'll say it is not the industry standard in your geographic area. That's the standard answer they'll say. But they will pay it in another geographic area, like Atlanta. They may pay A, B, C, and D because they're getting pushback from the collision centers, and they'll do it. Now, in Southwest Georgia, they may have 1 or 2 collision centers, and they may not push them back on those issues, and they will only pay A and B because they have programs set up, and you're a partner with the carrier. And they'll basically tell you that if you push back on that, we're going to drop you from this program. We're going to not make you a preferred collision center anymore. Now, steering is illegal in Georgia. And I'm not saying that they're steering, but they highly recommend for you to use their preferred collision centers. Okay, so you have small mom and pop shops in Southwest Georgia that are only getting paid for A and B, and you've got other places in Georgia that are getting paid for A, B, C, and D. Okay, I'll back off right now and let these groups say thank you.
Thank you, Representative Frank. Appreciate it. Committee, I appreciate it today. My name is Chuck Akers. I own and operate a collision center in Northeast Georgia. I do appreciate the opportunity to talk to this and the cost of our business, but I don't really want to focus on cost today. I think that's something else. I just want to talk about our business for a minute in terms of safety and what he just said. And I would say this, we're no longer a paint and body business. That's not our core focus anymore. Our core focus is safety, and that's to restore these safety systems back to their factory settings. Today's cars are not just machines with engines and wheels. They are rolling safety systems. The average vehicle on Georgia's roads today carries more than 30 advanced driver assist features, things like forward collision warning, automatic emergency braking, lane departure alerts, blind spot monitoring, and of course, rear vision cameras. All these systems are systems that we now take for granted. And when these systems are working, A 2025 MITRE study found that cars equipped with automatic emergency braking reduced rear end crashes by over 50% compared to those without it. Pedestrian braking systems alone cut crashing involving people on foot by nearly 10%. This changing technology saves lives, Georgia lives. But when these systems are damaged in a crash, they only continue saving lives if we repair them back to their original factory safe condition. And that is the responsibility that we carry as a repair industry. Repairing a car today is not simple, and it's no longer about hammering out dents and spraying paint. It's about restoring the technology that saves lives. The first thing that we do with a vehicle is not to remove parts or start making repairs. The first thing that we do is reference safety data to make sure that our technicians are safe from injury while making the repair. Electrocution from high voltage EV batteries or faulty airbag systems can seriously injure or even kill our technicians. To do work safely, every shop must have the right tools, the right training, and the right environment. If any one of these pieces are missing, the tools, the training, the environment, or the safety checks out for our people. The repair may look fine on the outside, but it is not safe. And that's the risk that we must not allow for our Georgia families and workers. Last year, this legislation passed tort reform that allows seatbelt use or non-use to be admitted into court as evidence of negligence. That was a bold recognition that safety choices matter, and ignoring them has consequences. But I would ask you to consider this. What about a vehicle being repaired unsafely? Is a seatbelt anchor not restored to factory standards, or an airbag sensor not reconnected properly, or if a camera for automatic emergency braking is not calibrated, those systems may fail at the very moment that we need them most. That is negligence too. The tort reform bill shows that Georgia understands the importance of accountability for safety, and I would submit to you that proper collision repair is an essential part of that accountability. When we fail to repair correctly, we don't just make mistakes, we put lives at risk. We're blessed to live in an age of incredible safe vehicles. Seatbelts, airbags, crash zones, and now advanced driver assist systems are saving lives every single day in Georgia. But all of that safety only continues if repairs are done the right way, by restoring vehicles to their factory safe condition. That means proper tools, proper training, proper standards, and accountability for every repair. Because if we cut corners, families pay the price, not just in dollars, but in lives. Collision repair centers in Georgia are safety businesses. We are partners in protecting the public, and I urge you to keep safety front and center as you evaluate insurance cost and industry practices. There's nothing more valuable in this room than Georgia lives. Thank you.
You came from Northeast Georgia.
Yes, sir.
Where'd you come from up
I'm in
there?
Haversham County.
Haversham County. Okay, you're well represented by Victor Anderson, I believe. So,
Yes, sir.
all right, thanks for coming.
Thank you.
Yes, sir.
Good afternoon. Thank you for the opportunity. My name is Jason Babb. I own a collision center in Chatsworth, Georgia. I'm here today to discuss a critical issue facing Georgia consumers. I'm going to be probably driving home some of the things that Lehman talked about, but the issue is a disconnect between vehicle manufacturers and the insurance companies. In the auto repair process, the issue is that it's leaving significant financial and safety burdens on our citizens. The problem stems from a fundamental conflict. Vehicle manufacturers, or OEMs, publish specific non-negotiable procedures for repairing their cars. These documents dictate what can be repaired, how parts must be replaced, and what calibrations are required for safety systems. These aren't suggestions, so they are engineering mandates designed to restore a vehicle to its pre-accident condition and ensure its safety on our road. However, when a body shop submits this repair plan based on these OEM procedures to the insurance company, we are routinely met with denials from insurance companies. We hear phrases like, "We don't pay for that. That's not customary in your area. That's not competitive in your area. That's a cost of doing business, and you're the only one that asked for that." They refuse to cover the full cost of a safe and correct repair. This puts the auto repair shops in an impossible position and leaves us with three unacceptable options. The option number one, concede and absorb the cost, meaning we're not reimbursed for necessary repairs. Option number two, pass the cost to the customer, forcing them to pay unexpected expenses out of pocket for a repair they have already paid for through their insurance premium. Or number three, cut corners and perform an unsafe repair, which compromises the vehicle's structural integrity and functionality. All three outcomes are unacceptable. The customer who has paid their premium is not being made whole. Either they pay more out of pocket, or even worse, the roads are filled with unsafely repaired vehicles, putting every Georgian life at risk. We must prioritize consumer safety and fairness. Also, beyond safety, the process that we currently go through creates unnecessary and costly delays. A simple repair can be a frustrating and protracted experience for the consumer. When a damaged vehicle arrives at our shop, we can't do anything till we get an initial estimate from the insurance company. Once we get that estimate, then we can disassemble the car and find all the damage that was missed on the initial estimate, create a repair plan, and then we must submit a supplement back to the insurance company. And then once the car is repaired, we're often submitting a final bill to them as well. So there's several areas where we wait on approvals from the insurance companies. These delays have a real financial impact. Most insurance policies only provide 30-day rental policy or rental car allowance. And we've seen many instances where a repair that should take only 1 to 2 weeks can be stretched to 6 or 8 weeks due to these approval processes. This leaves the consumer to pay for weeks of rental car expenses out of their own pocket, which is another unexpected and unfair cost. To be fair and do the right thing, we must hold all parties accountable. The consumer must be made whole, and our state should not tolerate a system that compromises safety and burdens our citizens with hidden costs and unreasonable delays. I do have a couple of real-world examples of the delays that I'm talking about. I have one car here that went through our shop personally that experienced 52 days of delay waiting on insurance approvals. I have another car, 2022 GMC Terrain, so nothing exotic or anything crazy. The repair took 4 days and 32 days. It was in our shop 36 days. It had 32 days of wait time, and the list goes on and on. So thank you for your time.
Thank you. I think Representative Kelly has a question.
Thank you, Mr. Chairman. Thank y'all for being with us today, and really for any three of y'all. What percentage of claims that you're dealing with would you say this happens with?
Do you mean in terms of that many days of delay or just like?
Just the back and forth where y'all feel like y'all need to do something and y'all are told by the insurance company that they disagree with you?
I was going to say 50% at my shop. But
1 in every 2? More? How many, what percentage do you see?
I mean, I think every car's a negotiation. The only time it's really not is if you're a direct relationship with the insurance company. If you come to mind. I'm sorry. I would say that the majority of the time, about the only time it's not is if you're in a direct relationship with the insurance company. Though in those cases, those files are audited to keep us honest to that. But if it's not that, then when you do submit a supplement, you rarely get back what you need to be able to repair the car correctly.
Can you speak to us about what the rising cost to repair vehicles that y'all seen just over the last 5 years?
Yeah, unfortunately, I can't. Since 2020, on average around the country, the cost of repair has risen $2,200 per car. Large part of that cost is in the calibrations for ADAS or advanced driver assist systems. And some of that is in parts. These cars are designed now to, they're designed very well to where the parts, the front bumper, the frame, they all absorb energy, which ultimately protects what's in the cabin. I will say this though, with that rise in cost for the 8 past quarters, there has been a reduction of accident frequency and a reduction of claims, as well as there's data that says that there's less severe injuries and less fatalities because of the car accident. So it's doing its job.
And we understand the rising costs. You know, when the last time Georgia examined what the liability limits were for property damage, the minimum policy limits were for property damage in Georgia?
I could not answer that.
Okay, thank you. I appreciate y'all being here. Very informative.
Thank y'all for coming. Ms. Combs, I know you didn't speak, but on the way down here on I-16, I had a big rock come off a truck and bust my windshield. So Sports and Imports Collision in Duluth, Georgia will get a customer from your trip down here. So thank you for making the trip. We got another question from Representative Donahue, who is from y'all's neck of the woods in Northeast.
Thank you, Mr. Chairman. Let me ask a question, pretty simple. When you're repairing the part of whatever said vehicle is, do you have a secondary market on parts that you are required to use, or does the customer have the right to fix their BMW with the BMW part, Mercedes, or certain parts that come from Ford or Chevy?
That's a completely different rabbit hole we could run down. Normally,
I love the rabbit hunt.
we, in the past, have been asked, because it's in the policy language that states they can use aftermarket or non-OEM parts. In the past, they have always had to be CAPA certified, which means they go through a certification process. Now, the CAPA certification is not required. They're expecting us to use the absolute cheapest part we can find. At my shop, if they figure CAPA certified parts, we can have it price matched to OEM parts and put all OEM parts on the car. But when they figured $15 fenders that they found on eBay or something, we can't do that, and that is becoming common practice.
Did that start around 2023, or I'd read a little bit about this, 2022, 2023, it seemed like the marketing process of the parts had declined quite a bit.
There, around, I would say post-COVID, there began to be more aftermarket part vendors, and that kind of opened the door for them to use those vendors. And they just put the absolute cheapest thing they can find out there.
Thank you all so much.
One question.
We have a question actually from Representative Williams.
Thank you, Representative Franklin, for bringing them. It was very interesting, but I hope that, and my neighbor, 9 months to fix her car, 9 months. She borrowed my car so much I started invoicing her. But what I would really think that we could not finish this discussion, I'm not talking about today, but where we are without talking about the extended warranty people. There's some personal experience there. Talk about 3-card Motley. But at some point, Mr. Chairman, I sure wish we could hear from an extent. They're pretty big business right now, pretty big.
That would probably be something more for a mechanical shop. We don't really get into warranty repaired items. Lehman could speak on that better from a dealership service point.
Why don't we do this? I think that's getting, we can look into that and follow up, but let's focus on the insurance rates and costs and claims. And I think y'all have done an excellent job highlighting this. Please get us some solutions to consider on this. You've highlighted a big problem. So thank y'all for coming. We've got one witness who is celebrating an anniversary this weekend, so I'm going to get you and your wife on the road. Mr. Hayden Willis, who has come here from Moultrie, Georgia. He's represented by Chaz Cannon, who went to West Point and worked at the Pentagon, and appreciate you driving several hours here to this committee meeting today.
Thank you, Chairman Reeves, and it's good to see you, Speaker Burns. I know that it's always nice. I saw you last time in Moultrie at the Art Center, and we always appreciate you coming over to our neck of the woods as well. I am a lifelong resident of Moultrie, Georgia. I did go to undergraduate at Oglethorpe University, and while I was there, I worked on the Chambliss Senate campaign in 2002. After undergrad, I went to law school at LSU from 2004 to 2007, and that's important because that's when Hurricane Katrina hit. Hurricane Katrina changed my life. I was starting my second year of law school. One of my law school classmates moved in and lived on the in my apartment on the air mattress, and her whole family moved into her 2-bedroom apartment. And they were from New Orleans and the North Shore. And by the way, the inspection tag that she was talking about, the New Orleans people call those brake tags. So at any rate, Katrina was a formative experience for me. I was in an administrative law class at LSU, and we were learning the alphabet soup of government agencies. And, you know, that professor down there just said, oh, we're just going to throw everything out the door. We're going to learn about how government helps or defeats people after a major catastrophe. And that again, Chairman Reeves, you talked about my anniversary. I'm married to Jenna, and she's here with me today. Her dad was my AP history teacher and my 8th grade football coach. And, you know, we enjoy coming to Savannah, but we're just as likely to be at the school board conference as we are at Savannah Smiles. So we enjoy all aspects of being in Savannah. We have 2 young children, which is important for my presentation. Merritt is our little girl. She's 8 years old in the 2nd grade, and Tristan is a 5-year-old little boy, and he's in kindergarten. And just while I was sitting there, his teacher sent out a smiley face for his conduct today. So that was a very good news to get here. They got me into the school board business. I'm on my 2nd term as chairman of the County Board of Education. I want to tell you all that we have had great successes in that school system. Our single score ranking has dramatically improved. And I think we do that because we are trying to run that school system like a business, and that we, in that vein, we expect and we welcome competition. So that's important. We expect and we welcome competition, and we think the competition should make us better. I spent 8 years as chairman of the Colquitt County Republican Party from 2013 to 2021. I taught politics at ABAC for 10 years, and like quite my age bracket, I got started in public service again by working with him. And he let a lot of us step through some pretty high cotton, including Representative Cannon, who you spoke of. But before Saxby got into politics, and he didn't let us call him anything but Saxby, his law practice was right across the street from where I opened my law office, and he practiced there, and his law practice focused on helping farmers. And that's where earlier we started talking about suit limitations, and I've brought y'all the Shingler case. It's a 2023 Court of Appeals case. It's in your materials out of Decatur County, Bainbridge. Mr. Ronald Shingler lived in Decatur County. He had a farm policy with Farm Bureau. He suffered losses and damage to farm property in 2018 when Hurricane Michael came through. It made landfall near Mexico Beach as a Cat 5. It definitely had some similarities to Katrina. We remember that I remember the power being out for a week. Similarly with Michael in Southwest Georgia, long-term power outages. Mr. Shingler made an immediate claim under his farm policy. And Georgia Farm Bureau made multiple property inspections. We've talked about drawing out the claims process. Mr. Shingler, at Georgia Farm Bureau's request, submitted his proof of loss in early 2019. He filed suit on November 22 of 2019, 1 year and 6 weeks after the date of loss. And in his case, summary judgment was granted to Georgia Farm Bureau due to the expiration of the 1 year suit of limitations period. Chairman Reeves, as it's been pointed out, thousands upon thousands of Georgians are coming up on the 1-year anniversary of Hurricane Helene making landfall. Those folks face the same unfortunate plight and need to use that Shingler case and use it very instructively. I included the Reeves case in your materials as well to show that it's a little bit of a different kind of case, but even when the insurance company defaults, that means the insurance company doesn't answer your lawsuit, it can still use the 1-year suit limitation to come back later and avoid paying that claim. And so the Court of Appeals took the Shingler case and came back in Reeves and said, yeah, we really meant that. As a matter of fact, we meant it in the strongest way possible. So it only leaves the legislature to come and fix this. The courts are not going to fix this issue. So I included some law review articles, and I just want to go over some points quickly that I saw in these law review articles. Shortening statutes of limitations by contract. The key issues I see, 2 state Supreme Courts have held that a suit limitation clause which abrogates the statute of limitations is against public policy. Insurance companies, already highly profitable business enterprises, are using the suit limitation clause to override legislative judgments about the appropriate limitations period for an individual or public entity such as county government to pursue a claim for property damage, even in the aftermath of a storm which causes government to declare a prolonged state of emergency. Astonishingly, the Shingler case keeps the door open for even further limitations. Let's suppose that the time to file suit in the contract was shortened to 6 months. Still fine under Shingler. 3 months? Probably still fine under Shingler. Now, there's a great Seinfeld reference in the Villanova Law Review article that captures the absurdity of expecting ordinary Americans to understand the nature and effect of the clause. We all have that friend, and I think y'all probably all have this friend that asks you to look up a statue for them. Not a statute, but a statue. Okay? Well, these are the people buying these insurance policies too. The people that are asking you to go look up a statute for them. So the court has essentially framed the question as whether the insurance company can supplant the legislative judgment about when claims become stale. Our Court of Appeals has given an emphatic yes, a yes to the insurance companies, allowing imposition of a shorter limitations period for the insured, even if that insured is a public entity or a farmer in Southwest Georgia. And then when the claim goes unpaid, in many instances, it's the taxpayer that's the most likely to be left holding the bag. Think about it. If that claim at that public entity, if your county board of commissioners has a farm building somewhere or a maintenance shed somewhere, and they file the claim and it doesn't get paid, who's going to shoulder that? Who's going to shoulder that cost? They're going to have to raise their millage rates. And in many instances that we've already seen that start happening. I want this legislature to think about 3 states, South Carolina, Florida, and Texas. South Carolina, Florida, and Texas have statutes that generally and broadly disallow the shortening of a statute of limitations by contract. On the heels of last year's tort reform legislation, it would make sense for Georgia to join those states. These states are not known to be states that are overly friendly to plaintiffs' attorneys. The opposite, in fact. Simple fix. A lot of people have talked about this is a complex issue. I'm giving you a simple fix right here. We are going to take that Florida statute, it's only 37 words, and we are going to copy and paste, and we are going to pass their statute next session, and it says any provision in a contract fixing the period of time within which an action arising out of the contract may be begun at less than the applicable statute of limitations is void. That's your simple. For Mr. Shingler and those similarly situated, it must be frustrating and demeaning not to be allowed to be heard. A victim of Hurricane Michael, left with feelings of frustration and powerlessness, hung out to dry by the legal system and undoubtedly forgotten by the politicians in Atlanta. By the way, Shingler Farms has been in operation for 100 years. 100 years. They make hay, or they're hay farmers. If you're a cattle farmer and you don't know a good hay farmer, you're in trouble. A statutory approach that bans suit limitation clauses entirely is certainly the brightest line that can be drawn and the one that brings the swiftest clarity to the law. For those who will come before you saying, what about freedom of contract? Meredith Miller responds this way. Party autonomy is a strained concept in a relationship with an inherent imbalance of bargaining power, where the agreements are most frequently standardized forms drafted by the insurer. You know, I'm going to recount a conversation I had with Representative Cannon, who's also our county administrator. And if I've got this wrong, just ask him his conversation. But surely you've read the contract that Colquitt County has for their property damage. Oh, yeah, I've read that. And I said, you know, in that contract, there's a suit limitation clause in that contract that your 4 years is cut down to 2. So I'm not sure I knew that. And I said, well, certainly you can tell me how much you saved the taxpayers by bargaining with the insurance company to get a lower rate to give up that right that they're taking from you, that 2-year limitation versus the 4 years that's the same. You know, I don't think they gave us a discount. Now, if that wasn't the conversation, ask him what his side of it was, but I'm almost certain, I'm not calling Chaz out, I'm saying I'm almost certain I could talk to any county administrator in the 159 counties, and 150 of them, the conversation would go on the same way. So just a few last thoughts. Fundamentally, almost every insurance law problem, dispute or paying or not paying claims. The policyholder has a legitimate expectation of broad coverage, just like the advertising slogans for these companies say. Nationwide is on your side. Allstate, you're in good hands. Liberty Mutual, you only pay for what you need. After a loss, the insurer engaged in extensive information gathering and information sharing to ask facts. Most importantly, it can deny a claim in whole or in part. Doing so, or even expressly or implicitly threatening to do so, increases a policyholder's cost of pursuing the claim and therefore the cost of non-performance and diminishes the value of that claim. Imbalance of power is only exacerbated by the policyholder's emotional and financial vulnerability following the loss. The purpose of the insurance is to provide funds to rebuild or otherwise compensate, which would be otherwise unavailable at the time of the loss. A particularly egregious form of opportunism engaged in by the insurers is known as post-claim underwriting. When a claim is presented, a company can seize on errors by the insured in the application to deny coverage, and insurers have systematically exploited policyholders by designing an intricate application process that make misrepresentations a virtual certainty. just briefly, bad faith. Georgia does have bad faith. Bad faith legislation requires 60 days notice to the insurer. So essentially, think about this. If the insured already has a 1-year suit limitation, the insurer would have to be put on notice less than 10 months after the loss, or the pilot or the bad faith claim would likely be foreclosed. So that condenses that time crunch even further. There's a neighboring school system. We're working, myself and one of my friends that I know from my time in Louisiana, we represent school system on their claims. Talk to other systems about what's going on. And one of the systems, big systems that's close to us that we don't represent, I said, what's going on over there? And they said, well, they've sent out like 6 or 7 different kinds of engineers to look at this claim. And this was back in April and May of this year. So getting about 8 months later. And I said, well, how much money have you gotten to fix things? We hadn't gotten any money. Well, why hadn't you got any money yet? Well, every time we ask, they send somebody else, to a different kind of expert, to come check and see what's going on. State of emergency level hurricanes are getting more frequent in Georgia. Florida's been dealing with this longer. And so the framework they've got that I've suggested, I think will work for us too. I'm certainly happy to answer any questions. I've left a flash drive with all my materials. I wasn't sure I was going to make it all the way to Friday afternoon this week. It's the end of homecoming week for the kids. So we've survived Stars and Stripes Day, Camo Day, Western Day, Tropical Day, and I think today was Hog Wild Day. So go Pack Go, and certainly I do want to take just one moment to tell you, I have my friends, the Owens family, that came before a legislative committee just like yours. And the Owens family was here for PANs and PANDAS, and to make insurance companies cover those types of problems for young kids. And insurance companies would not pay for PANs and PANDAS. The Owens family came and talked to y'all. You passed legislation and fixed it. So I know you guys are interested in helping Georgia families fix real problems that's going on. And on behalf of myself, I thank this body, other families like that on the PANs and PANDAS issue. Thank you.
Thank you, Mr. Willis. Get us that Florida 37-word statute and some.
It's in your material.
Good. It's on the flash drive. We're going to get that online, so committee members look at that. Thank you for coming. Really appreciate it. Your wife, enjoyed meeting her. She's from America, or went to Southwestern, where I've got family down there, and their mascot's the hurricanes. So in addition to the coast, we got some bad weather there in Southwest Georgia also. So appreciate you coming today. Thank you.
Thank you.
We got a question from Representative Kelly.
Ms. Willis, thank you for being here with us. Thank you for your service on the school board down there. Thank you to your wife for letting you come over here on your anniversary to really shed light on something that is just mind-blowing to me that's going on in our state. I appreciate you highlighting Hurricane Katrina. My wife grew up in Biloxi, Mississippi, and spent 9 months living in a FEMA trailer after Hurricane Katrina, and I know the devastation that both Southeast and Southwest Georgia have experienced recently is devastating for y'all, and y'all are still dealing with it. As a result of these shortened time periods, it's leading to cases not getting resolved, claims not getting resolved inside that year-long period, and then you're faced with just suing the insurance company, right, within the year period, if you know about it.
Yes, so I can speak to that. One of the cases we had going on was coming on a 2-year, by contract, a 2-year suit limitation. And we did have to file suit. And then the immediate conversation was, look, we didn't have any choice. It was actually kind of the opposite of the Shingler case, And then they said, well, why'd you do that? And we said, because of this provision. And, I think everybody wanted to keep talking, but we couldn't. The lawsuit had to get filed instead of it being worked out in a different manner.
Would you say that these causes are resulting in more litigation?
Has to be.
And would you say that is driving up litigation costs in Georgia?
Not only litigation costs, but it's putting a strain on our courts. You remember our court systems, if you look in a lot of our court systems, we know still have a backlog from COVID, because in Georgia, the same judges in a lot of our smaller jurisdictions handle civil, criminal, all kinds of stuff. And so they can't get caught up with their backlog. And now here are these additional civil lawsuits coming in. So it's putting a strain on everybody. And I don't mean to try to dance around that question, but the whole system's getting strained by this.
Thank you again for being here with us.
Thank you. And thank you for inviting me as well.
Thank you, Mr. Willis.
Thank you, Chairman Reeves.
All right, here's the order we've got. I'm going to call on Dan Snipes and then Michael Newman of the Institute for Business and Home Safety, and then Ms. Ashley Duval. Do we have anybody else who wants to testify today? All right, we're in the home stretch. Mr. Snipes.
Thank you, Chairman. And I'm Dan Snipes. I'm an attorney in Statesboro, and I know most of y'all quite well. I wanted to talk about my experiences with Hurricane Helene, because I think as y'all try to do something, the speaker's always talking about being fair and balanced. I think it's good to understand kind of the real world application of how things happen. And I want to start by saying that I was extremely lucky and extremely blessed in Hurricane Helene. So many people had it so much worse. Statesboro had it so much better than Vidalia or Hazelhurst or Valdosta or Rennes or Augusta. But we still went through a lot of loss. And I think my experience is illustrative of how difficult this process can be. Because at my home, I had about 60 trees or treetops down. 2 of the treetops hit my F-150 truck. I had shingles blown off my roof at home. I had shingles blown off my office close to the Statesboro Hospital. So I wound up having 3 separate claims from Hurricane Helene. And the first one, and I want to say, first of all, how lucky I am, because my truck was messed up pretty bad, but I know somebody in Statesboro that sells really good GM products. And within a week, I had a new pickup truck. But so I was in a position to go get a new pickup truck. But it took, for my truck, a Ford F-150, it took until January to get the repairs completed. And that's a combination of a lot of factors they talked about, but it was getting somebody to look at it, getting them to approve it, getting the parts in. And, luckily that wasn't my sole means of transportation. Like I said, I was able to go buy another truck, and that's my farm truck now. But it took that long for me to get my truck fixed. But the real part and thing I wanted to get into is what happened at my office and what happened at my home with my roof. Because our office out by the Market District in Statesboro's got shingle roof like my house does. And, in both places, there were shingles missing. There were patches at my house, around my chimney. There was water coming in around the chimney. And, once again, I'm lucky and blessed in a lot of ways, but I know my roofer real well. So he's a client of my law firm. So I had somebody at the house within a few days putting tarps up, reflashing around the chimney. We had somebody doing the same thing at the office. And then and Helene was devastating. So it took a little while to get adjusters because the guy who did my house had to come from out of state. But then when he came to my house, which is a 2-story house, the first week of October, he didn't get to my house until right at dusk. And it was 5 o'clock and I was still at the office and I didn't have time to get there. As he told my wife, he said, this is my 10th house today. I don't want to get up on a ladder again. I'm just going to take pictures. And at that point, I'm saying, well, that's good because I had an estimate from my roofer to replace my roof. Well, then when I get the estimate from my roofer and then I get the first report for my house, there was about a $16,000 delta there, a difference. Replace the roof, which my My roofer said, you can replace the whole roof, Dan. There's damage front, back, and wherever. There's just no realistic way to fix this, because if we patch it, we're gonna damage the other parts of it. So we just need to rip it off and redo it. And I went back and forth, and I'm a lawyer, okay? I'm a trial lawyer. I know a fair amount about how the court system operates. After 2 months, I got them from 8 to 12. And you know what? A lawyer doesn't litigate over $12,000, so I ate $12,000 on my house, paid the roofer to get my house fixed. And I went through it, and it wasn't, you know, arguably I could have brought a claim under 3346, but then I'm looking at, you know, 50% of what the difference was, so maybe $6,000 more, but it doesn't make financial sense, okay? Same thing on my office. About a $30,000 cost to replace the roof, but nobody's going, you know, they're not going to pay for it. And we haggled it out, and we ate about $15,000 at the office. And I'm a lawyer, and I made the decision it's better to get on with life and do what normal people do. Go back to work, had a bunch of trees to clean up at the house. I need to be practicing law. That scenario, though, gets played out thousands and thousands of times after these disasters. It's not that people maybe get shut out, but they have to eat some of it, just like the auto body people have to eat some of it. And if we don't keep a fair and balanced system, if we don't maintain the ability for consumers to be able to hold big companies responsible, then the business model is carve off 25 or 30% every time something happens. And that's the thing I want to stress to y'all, the importance of keeping the court system fair and balanced, because it has to work for everybody. And listen, I'm not here to whine about my story, but I think it's illustrative of when people get run over sometimes, it's just better to get on with life. But when you're running over people consistently, you've got to have a fair and balanced system. So that's what I would ask y'all to just make sure when we're looking at this, and to follow up on what Mr. Ellis said. A year statutory, when you contractually shorten a statute of limitations, you're doing that because you know you're limiting the rights of individuals to hold you accountable. That's the reason you're doing it. That's all I've got.
Mr. Snipes, I've got something, somebody brought to our attention after the last meeting, these new short-term car insurance policies.
Yes, sir.
And it's my understanding you know a little bit about that, but I'm a little bit troubled. I mean, normally people are supposed to pay for insurance 365 days a year, and that spreads the load over 11 million people rather than, you know, a smaller group of people paying for everything. So what's going on with these new short-term policies? And then also uninsured motorists. I know Speaker Pro Tem Jan Jones has a bill pending about excluded drivers on uninsured motorist policies. Anything that comes to mind on either of those topics?
The first thing on the short-term policies, I will say generally unaware of this phenomenon until relatively recently. And, you know, and it's set up, and part of it is with technology now, though, where you can purchase a short-term policy of insurance. The problem is, I think it's undermining the public policy of requiring a minimum level of insurance that's in place for a period of time. Because when somebody can buy just spot insurance is what I'll call it, but you're buying it for just a weekend, or you're buying it for a very short period of time, you're then allowing somebody to maybe do what they need to do to secure a driver's license or to purchase a vehicle, but you're not fulfilling the mandate of the state, is that we're going to require drivers in the state to maintain liability insurance. So quite frankly, think the way the statutes are written now, and I think it's probably, I think probably the insurance companies have an obligation to provide a policy for the minimum period, which I think is 6 months, is what the minimum policy is by statute. So I don't think it's proper right now, but I think it's something that needs to be addressed, because there is a problem of somebody buying insurance so they can either get a license, purchase a vehicle, and they, you know, it's a used vehicle, or buy here, pay here, or whatever, and they're buying it for a week, but then on day 8 or 9, the policy lapses, and we're creating a big problem there.
And on uninsured, on uninsured motorists, anything coming to mind there? Because after that last meeting in August, I had constituents who said uninsured motorists. I mean, I think that's what I'm paying for. It feels like, my premiums are going up because, I'm paying for somebody who's uninsured. So anything you're seeing with uninsured motorist issues.
Well, I mean, I think that gets into a very complex circumstance that we have because, and I don't know that when you have people though who are working, who are not able to get driver's license, okay? Whether they're because of court problems, they can't get their driver's license because they're in the country, not eligible to get a driver's license, whatever, but they're working and earning a living, they're going to go to work. That's just, I mean, that's the thing that local judges have to balance a lot when people who are trying to provide for their family are trying to get to a job, but then for whatever reason, they don't have insurance. So I think there are certainly more uninsured drivers than there used to be. And then that gets into, I think, making sure people understand that they need to be purchasing that part of their automobile policy, that they're carrying uninsured drivers, but there certainly are more. I think it's part of a bigger, complex social problem because, I mean, you practice law in a small town, it doesn't take long for somebody who loses their driver's license and has fines to pay and the family to support. I don't understand. We suspend driver's license for failure to pay child support. Well, if you can't drive to work, how are you ever going to catch up child support? That's not y'all's problem. That's just something I've seen over the years.
Thank you. It looks like Representative Donahue has a question.
Thank you, Chairman. Chairman Reeves answered the first two parts of the question, uninsured motors. I have lots of my constituents. By law, we have to have insurance.
Yes.
And by law, that means that when you're not covered, you're basically going to receive a penalty or some type of punishment. This is happening more and more to where constituents will call me and their claim $7,000 or it's $6,500 or $9,000. They're not going to get an attorney.
Yeah.
The insurance companies outlast them on response. Now, you answered the part on the uninsured motor from the chairman. The part I see the biggest is shingles roofing, to where someone will negotiate for $20,000 on a roof, like you did. You chose to lose that money because it wasn't physically common sense for you to work, lose revenue from your job, and you gave into it. These people will be told they have 150 shingles to put on a house. This lady here is not going to accept 150 to 200 individual shingles on her house. It looks like a Band-Aid. We're running more and more into that. Now, I understand both sides of the roofing industry. What would you think would be the solution of fixing this? Because when we buy insurance, we're covered for whatever happens, depending on the policy. The problem is there's so many parts of the policy that is now broken down to where I understand if I have a 25-year-old roof, I shouldn't really expect a brand new roof unless it says that in my policy. But do you think we'll ever get to prorating that, or are we gonna have individual policies on roofing parts of the house?
I don't want to try to be put up here as being an insurance industry expert. I think, Chairman Lumsden or some of my friends in the back corner of the room, they're probably a little bit better at that. But what I think you're trying to look at there is you've got to have some type of reasonable way of trying to resolve disputes that don't involve the cost of litigation for those type of claims. And I don't know if that's through, legislation that says we're going to set up a way to try to resolve claims that are below a certain dollar amount, or if it's through regulation through the insurance commissioner's office. But I think that's the only practical way to try to do that, because the dollar disputes for that kind of, it doesn't justify the costs that are associated with any kind of litigation.
And I agree. And I think the biggest problem I have is small claims. It's claims that no one's going to hire an attorney for. It's 6,000 again to 7,500, maybe 10,000. And sometimes I think it'd be easier to have an arbitrator, to where that arbitrator comes in and he represents, because insurance companies aren't the big bad wolf. I'm not here to say that. Used to, you could call as you're in good hands with Allstate or State Farm, your good neighbor. Now that's kind of backed off a little bit from when you're looking at coming out and you have appraisers that used to was at your house or at your car within 30 minutes to 3 hours to give you an answer. Now they send someone out with high heels and they can't climb a roof. They're not going to climb a roof. And these are things that I'm not an attorney, so I lose money by saving these people this money fighting their case, but I'm not an attorney. And with that, we need some kind of solution to fix this problem. And I would love to have the tools to hand to Commissioner King to where we can put in legislation somewhere to where we can at least have something come together. But thank you.
Thank you, Mr. Snipes.
To those of y'all that are coming to the Georgia Southern game tomorrow, we look forward to welcoming you to Statesboro and go Eagles.
Thank you. Thank you. All right. All right, Mr. Michael Newman. Tell us about the Institute for Business and Home Safety.
We're going to want to go to the beginning of that presentation, I think. All right. Can you all hear me all right? Thank you so much for the invitation. My name is Michael Newman. I have the pleasure of serving as the General Counsel for the Insurance Institute for Business and Home Safety. I am very aware that it is 4:47 on a Friday afternoon, and I am just about the last thing standing in the way of between y'all and a Friday night beverage. So I'm going to keep up the energy, and I very much appreciate your attention today. I want to start just by noting Professor Hartwig kind of, if the metaphor isn't too on the nose, painted a pretty stormy picture of the insurance industry. And I am here with the perhaps sole ray of sunshine. I'm also struck by some of the testimony earlier today, particularly from the trial lawyers, about the difficulties in the claims process. So let me say, the very best claim is one a homeowner does not have to make. And that's what I'm here today to share with you. We are not powerless. Mr. Pattison said that the legislature can't do anything about natural disasters. That is true. Y'all can't legislate away hurricanes. But there are actions that can be taken by homeowners and by the Georgia legislature to help reduce the risk of loss to homes in the face of the severe weather that Georgia faces. And that's what I'm here today to talk to you about. As with some of my friends from earlier today, I want to start with Hurricane Helene, which slammed into the western Florida coast on September 26th of last year. It was a Cat 4 hurricane with 140-mile-per-hour winds. It damaged the coast with high winds and storm surge, and then it turned inland, bringing 70 to 100-mile-per-hour winds right here to Georgia. Now, that produced a surprising amount of tree fall that yielded devastating impacts on areas along its path, including Augusta, which was 250 miles away from landfall of Hurricane Helene. And you can see from the satellite data, the tree canopy was gone. Winds of that strength can and do also damage homes and roofs, as we heard from Mr. Snipes. Now, hurricanes are not, however, the only source of wind damage in Georgia. The image before you is a house that was significantly damaged by a January 2023 tornado that went through the Atlanta metro area. Since 1950, Georgia has had 2,337 reported tornadoes, causing $3.7 billion in property damage. And in the first 5 months of 2025 alone, there were 52 reported tornadoes in the state. The vast majority of those have been EF0 and EF1 tornadoes. And as I'm going to address in just a little bit, these are the wind speeds that we know how to make homes withstand. This is preventable damage. I'm not going to belabor this. Professor Hartwig covered it, but since 1980, we've seen a significant rise in severe weather events around the country. Georgia hasn't been immune. Since 2010, there have been 86 separate billion-dollar weather events that have affected the state of Georgia, including 20 hurricanes and 51 severe storms. This tracks our general knowledge of the risk profile here in this state. Coastal Georgia obviously has hurricane risk. We've seen more and more inland tracking hurricanes affecting southern Georgia, and western Georgia is at risk for severe convective storms, particularly the winds associated with tornadoes. Now, Given this risk profile, we need more Georgia families and communities to have homes that are able to withstand this type of extreme weather. That's less damage, it's less heartache, and yes, it's fewer insured losses because there are fewer claims. This is why the Insurance Institute for Business and Home Safety exists. We are a 501c3 nonprofit research institute. We're fully funded by the investment of the property insurance industry. And what we're able to do at our facility in Richburg, South Carolina, is recreate severe weather across the perils of wind, rain, hail, and wildfire, and conduct full-scale testing of residential and commercial buildings. We identify the vulnerabilities and then the ways to close them through mitigation actions that are effective, achievable, and affordable for homeowners. We do so ever mindful of the deep need to make our homes and communities more survivable and more insurable. Survivable means homes that we can withstand the severe weather we know that they will face. Insurable means reducing risks so that they are attractive risks for insurers. Today, I'm going to take you inside IBHS research, particularly with regard to wind, to help you better understand how it attacks homes and our places of work, worship, education, and gathering, and the known science-based and verifiable risk reduction actions and related public policies that can make Georgia's homes more survivable, its communities more insurable, and its insurance markets healthier. First, let me take you inside of IBHS with a short video. We are all about research that drives change. We do that through events and media interviews, testimony. Fundamentally, we are actionable science that drives people to change their behaviors. And it's change that's really most evident after disasters, whether that's a hurricane or a tornado, a hailstorm, or a wildfire, where some roofs are damaged, but fortified roofs, which I'll describe later, are not. It's the homes that are still standing and the communities that are still thriving. We're informed by work in the field, studying damage after disasters. And then we have the IBHS Research Center, which enables us to do what nobody else can, literally turn the knobs on Mother Nature. Imagine, if you will, a 6-story airplane hangar with 105 fans, each as tall as me, that allows us to generate 130 mile-per-hour winds. We don't do downscale testing. We are testing full-size structures. And it shows us how houses and commercial buildings function as a system and the actions that we need so we can narrow the path of damage. Our innovative thinking in wind-driven rain and in hail research allows us to reshape the understanding of how these elements of the home actually work when confronted with Mother Nature. And our full-scale wildfire work is giving us unparalleled insights into building ignitions that we are bringing to bear in California and other states around the American West. We do this all to bend down the risk from natural hazards so that we can live out our mission to prevent avoidable suffering, to strengthen our homes and businesses, and to inform the insurance industry and support thriving communities. Now, I'm going to focus my remarks on wind, which is the primary hazard facing Georgia homeowners. And as my scientist friends like to remind me, wind is wind. Whether it comes from a hurricane or a tornado, it is attacking homes in remarkably similar ways, and its duration and intensity that are driving insured losses. Overwhelmingly, the damage starts with roof cover loss. You can see here from post-disaster investigations and from our lab, the roof cover is damaged, much like Mr. Snipes experienced after Hurricane Helene. Next, we see damage to siding and cladding. And then the connections between the roof and home start to break. And eventually, we end up with total structure collapse. I'm going to show you now a video that is taken from experiments and demonstrations we've done inside our test chamber at IBHS. And this is approximating what a severe convective storm of increasing strength might do to a structure. You can see here at winds of only 60 to 85 miles per hour, that's an EF0 level damage. It's already ripping off the shingles on top of the home and starting to rip away the siding on the side of the house. As the wind continues in strength, it attacks the garage door. Now, I'm going to cover garage doors a little bit later in my comments, but garage doors are what we call damage amplifiers. When they fail, wind rushes inside. Houses are not designed to defend against wind from the outside and the inside. After the garage door fails, we can see more structural failure, as you're going to see right here, where literally the wall of the home is starting to rip away. And this is EF2. Now, as the winds continue in their intensity and in their duration, we're going to start to see that structural breaking away that I described before, where literally the wind can tear the roof off of the home. This is from our lab in Richburg, but when we look at post-tornado imagery, you'll see houses that look just like this. So this is something that is both an experimentation and a lived reality of far too many families. Ultimately, once the roof rips away, there's nothing holding that house together anymore. It's like a house of cards at that point, and you have that total structural collapse. Here's the good news. Much of this damage, if not all of it, can be mitigated against. We can reduce this level of damage. So IBHS, we often say, leads with the roof, and that's because it's the first line of defense from weather. But when it fails, it can deeply amplify losses for families. And while we work across all roof covers, asphalt shingles, metal, tile, and new synthetic options, it's asphalt shingles that we focus on because they are the predominant roof cover in America. And at least in development, they are designed to withstand the strongest winds, up to 140 miles per hour, which are wind speeds that are rarely faced by American homes. And they go through a litany of standardized tests, which they legitimately face. And yet, shingles don't survive high winds the way that these tests would suggest. So what is going on? What we've learned is that the issue is the sealants. You see, over a decade of work at IBHS, we've learned that the sealants, the sticky bits on the back of the shingles, they break down over time. And when they fail, all the assumptions baked into those standardized tests no longer hold. Sir, you mentioned a hypothetical 25-year-old roof. I'm sure your roof is not 25 years old, but let me tell you, you're not in a good place with a 25-year-old roof. Why? It's still shedding water, but the sealants are no longer working to keep the shingles on your roof. What we can expect, and this is based on both lab work, we have an aging roof farm, so we actually study roofs over time, as well as in post-disaster investigations. For a 10-year-old asphalt shingle roof, there's about a 1 in 12 chance of visible damage from 60-mile-per-hour winds. Once we get to 90-mile-an-hour winds, it's 1 in 4 chance of visible damage. Once we get 100 miles per hour and even higher, we're getting closer and closer to a near certainty of visible damage. 10 years is the break point. After that, we should expect damage in wind conditions. I want to touch on garage doors. They're another unexpected source of risk to a home's survivability in high winds. I mentioned before that when they fail, the wind rushes in to the home. It can blow up the house like a balloon at that point. And that's why we call garage doors amplifiers, because it's the equivalent of taking an EF0 type tornado and causing damage at the level of an EF3 style. Fundamentally, a functional garage door can be the difference between structural damage and no structural damage when homes face windstorms. Between a family being able to return home after a storm and get on with their lives versus a family who is fundamentally disrupted by Mother Nature. And yet, too many garage doors aren't designed to withstand high winds. They're poorly labeled, and options that are rated for high winds are generally not available in many markets, including in inland Georgia. You can see here these stats. They tell the story. After Hurricane Ike, there were 80% garage door failures, which, by the way, results in structural failure like 90% of the time. After the tornadoes in Joplin and more, we saw garage door failure rates over 50%, but by Hurricane Ian in Florida, the failure rates dropped down below 10%. And the reason is wind-rated garage doors became available on the market, consumers started buying them, and damage went down significantly. So this is a solvable problem. We can fix this. A wind-rated garage door is something like $6,000. That's not nothing, but compare it to the significant structural damage you saw earlier. Again, this is a problem that can be fixed. So what else can we do about Georgia's ongoing losses from high winds? The solution I would put to you humbly is IBHS's Fortified program. Fortified is a voluntary re-roofing and new construction program with a technical standard and a verification process that absolutely reduces damage from severe storms, hurricanes, and high winds. It includes, as I mentioned, an independent documentation and verification process to ensure that every project that gets a Fortified designation from us has in fact been designed and constructed to our standards. It's available for single-family homes, for commercial buildings, and for multifamily buildings. Now, across each of those three programs, there are three increasing levels of resilience. We start with the roof, then Fortified Silver focuses on windows, doors, and garage doors. Fortified Gold focuses on a continuous load path. Now, I'm a lawyer talking about engineering, so bear with me, but essentially it's connection points from the roof all the way down to the foundation, which helps protect against the force of the wind loads when they get too high. We usually see Fortified Roof as the retrofit of choice in a new construction.
And you'll bring it back and you know,
Fortified
with time to allow
it. All right. I want to focus for a minute on Fortified Roof. It's got three components: locking down a drip edge, which is where the winds are most powerfully attacking the roof, having stronger connections with a better kind of nail, and sealing the roof deck. Now, my kids are 7 and 9, and they like to do a game with me where they say, you know, if you had a magic wand, what would you wish for? And I always say the same thing, and it drives them crazy. I always say, I want a sealed roof deck on every roof in America. They say, really? Don't you want more wishes or like $1 billion or something that would benefit us? And I say, no, because this is dollar for dollar, the easiest and the best mitigation action that I'm aware of. You see, roof decks are made up of OSB or plywood sheets, and there are gaps in between them because wood expands and contracts with the weather. What do you think happens with water when there's a gap between two roof decks and the top of the roof cover has blown off? The water goes in. In fact, we estimate that 1 inch of rainfall on a damaged roof can cause up to 9 bathtubs of water to pour in through an unsealed roof deck. Again, small children, right? So they sometimes will knock about 1 inch of bath water out of one bath, and I've seen the mess that that can cause. Imagine the mess that 9 bathtubs of water causes in a house. That's mold that needs to be remediated. That's stuff that needs to be replaced. It's the difference between a family being able to come home with a blue tarp over their roof and a family that's not able to come home because their home is no longer livable. It's also the difference between insurance claims of up to 3 times when we're talking about replacing a roof or replacing all of the things that go in a house underneath that roof. So Professor Hartwig referenced this study. I want to highlight it. It was done by actually a data call from the Alabama Department of Insurance. And the study was not done by IBHS, it was done by the University of Alabama, which I recognize that the University of Alabama doesn't have a lot of cachet here in Bulldog Country, but this particular report is quite good. They looked at 40,000 properties around coastal Alabama that experienced Hurricane Sally, and they saw reductions in claim frequency of 70%. They also saw that total damages could have been reduced if all 40,000 of those properties were fortified by $105.6 million in insured losses and $42 million for homeowners. That is the deductible. Now, the Federal Reserve has estimated for years that 40% of Americans cannot afford an unexpected expense of $400 without going into debt. What, if not an unexpected expense, is a deductible following a claim that was not expected? Imagine how much money homeowners could be saving in deductibles if only they had better roofs. And again, what that is broadly says is 75% of total claims paid in Hurricane Sally could have been avoided with Fortified. Now, Fortified is not just about coastal risks. We did a study looking at the superstorm outbreak in Alabama in 2011. And what we found is that 42% of the losses from those tornadoes could have been averted with the systems that are incorporated in Fortified. See, if an EF5 tornado lands on top of your house, there's absolutely nothing that anyone can do about that. But for every EF5, there are shoulders of wind speeds that are less intense. And it's that EF2, EF1, EF0 tornadoes we can do something about. This is preventable damage. And recall that of the 50 some odd tornadoes that impacted Georgia in the first 5 months of this year, every single one of them but one was an EF0 or EF1 tornado. Again, this is damage we can prevent. Fortified has 85,000 designations across 32 states, most of those along the hurricane coast. And as I regret to tell you, Georgia is the last remaining southeastern state where we have a very limited place. In fact, as of last week, last time I checked, we only had 19 designated homes in this state. 19. So how do we bring IBHS solutions like Fortified to bear in Georgia to transform housing in this state to be more survivable and insurable? Fortunately, we've got a strong public policy playbook that has worked in other states to catalyze resilient construction and retrofits, to support families and communities, and an overall healthier insurance market throughout the state. A model for success, and again, I'm sorry to tell you all this, but a model for success is right to your west in Alabama, a state that has over 55,000 Fortified designations. Now, a strong grant program is a critical part of Fortified's growth in Alabama. The Strengthen Alabama Homes program has helped drive Fortified growth in the state and become a national model for success. Grants are powerful because they catalyze supply and demand simultaneously for more resilient homes and roofs. The roofing workforce becomes trained and certified and Fortified so they can get the grant program business. They then take this knowledge and then bring it to the other parts of their business. It becomes part of their upsell. Hey, I can do a Fortified roof for you. I'm certified to do that. Homeowners become aware of Fortified through media and through the kitchen table conversations that happen all over the state. And they start demanding a better roof for themselves when the time comes to replace their roof. Without question, grants are a critical part of the Alabama story, but they're not the whole story. In fact, they account for less than 20% of Fortified designations in the state. The real Alabama story of Fortified success is actually 4 pillars. One is the grant program, of course. They are an important catalyst for brand recognition and workforce development. But there's also the code environment. Coastal Alabama has a building code that is on par with Fortified, meaning as a baseline, every home that is built to what approximates Fortified. It also lowers the relative cost of Fortified designation in that jurisdiction. The third pillar is price considerations by insurers. These price considerations don't cover the cost of the resilient retrofits and do not drive consumer choices on their own, but they do contribute to an overall basket of incentives that make resilience financially attractive to consumers. In Georgia, you have these discounts on the books. The final pillar is a strong engagement with local builders and roofers to ensure they're educated and that they are offering these services to families around the state. The Strengthen Alabama Homes model is taking off around the country. Louisiana has a similar program, as does Kentucky, Mississippi, Oklahoma, Minnesota, Maine, Arkansas, and North Carolina. We are actively working with states throughout the nation on programs that approximate this Alabama approach, and we certainly hope that Georgia will follow suit next year. It's not just grant programs. Fortified is becoming known as a national standard for resilient construction and programs and policies around the nation. We see Fortified incentivized or required in affordable housing programs in Louisiana and Mississippi and Minnesota, in disaster recovery programs in Iowa, Louisiana, and Florida, and in federal home loan bank programs across the country, including the Federal Home Loan Bank of Atlanta. I share all with you to say that not just Fortified, but the policies that are growing around Fortified are established, they are understood, we know how they work, and we know what works. So how does this apply to Georgia? Let's start with your building code. I'm sorry to tell you that the situation is not the best we have seen. Every 3 years, IBHS puts out a Rating the States report, looking at the building code environment for the 18 coastal states, the East Coast down along the Gulf Coast. These look at adoption and enforcement. They look at official training and continuing education. They look at contractor licensing and training. Georgia, unfortunately, falls into our poor band, scoring only 67 out of 100. That's primarily because Georgia applies the 2018 building code, which is now 2 codes out of cycle. The newest code is 2024, and there is not uniform enforcement. Local jurisdictions are allowed to opt out of this building code. So in this context, Fortified can help close some of the gaps left open by the building code. We're often asked, well, how much does it cost? How much more is it? Now, looking at data from Atlanta, we were able to see that Fortified will cost on average $13,000, $14,000, $15,000, $16,000, not thousand, excuse me, 13 to 16% more over the $10,000 to $15,000 it might cost to install a new roof to code. So given that, public investment and incentives in resilience can help make a difference in advancing resilience in Georgia. As noted, Georgia has already enacted mandatory insurance discounts, but clearly this isn't working because we only have 19 designations in the state. I hope those 19 people are enjoying their insurance discounts, but we can do better. To drive consumer behavior, you need more than just insurance discounts. For reasons I've already discussed, grant programs are at the heart of this overall public policy approach because they can help catalyze private market take-up. Tax incentives can also play a role, as can catastrophe savings accounts, which provide tax advantage savings accounts for certain approved expenses related to severe weather. Now, you have these CAT savings accounts in Georgia as of this year, but it limits qualified expenses to insurance deductibles and post-storm repairs. What if these accounts could be used for pre-storm retrofits to avoid the claim in the first place? I hope that you'll revisit those next session and think about how CAT savings accounts can be an important tool to help families save to do resilient retrofits. We think other innovative approaches like revolving loan funds can also help. And then the private sector and the philanthropic sector also have roles to play, all of which center on creating financial pathways for families to take action to reduce their risk before they have a claim. Together, these incentives and pathways can fill the bucket necessary to change consumer behavior. I think these are all really valid options for Georgia. I encourage you to consider them. But really, when it comes to driving supply and demand of Fortified, nothing beats a grant program. It is working in state after state after state. At the end of the day, we have a shared objective in helping families live in homes that can withstand severe weather. After the storm, families can get home and get on with their lives. Kids can go back to school. Parents can get back to work. Communities can stay intact. Homes are safer. Insurance markets are healthier. Tax bases and mortgage markets are more stable. Business is better for everyone. This is the power and the promise of enhancing survivability and insurability through science-backed risk reduction. I appreciate your time this afternoon and really look forward to taking any questions you might have.
Mr. Newman, thanks for coming. One question I have is, we're going to be looking at the premium tax at the meeting next month, October 17th in Columbus. And right now, there are no strings attached with a premium tax, but we got 159 counties and 500 something cities that are getting that money. Help us take a look at some criteria maybe to encourage the locals to participate in programs like this. You mentioned the local engagement and how that's helped in other states. So help us find some ways to encourage some of the mitigation measures that y'all are doing, possibly with some of that premium tax proceeds.
Yeah, I should say I have no knowledge and no opinion on the premium tax generally, but things that local governments can do. I mentioned before, Baldwin County and Mobile County in Alabama have enacted a building code supplement. It's basically a plus up over the building code they previously had that takes the fortified requirements and incorporates them into the building code. That's an action that can happen at the local level to help raise the bar for everyone so that new homes are built to fortified, and when a home needs to be re-roofed, it is done to the same level as fortified. Now, doesn't get people all the way to a designation, and there is real value in the verification process of fortified. I didn't highlight it today, but that same Alabama study found that homes that were designated as fortified performed 50% better in Hurricane Sally than homes that were built to the fortified standard, but not evaluated. But still, having that enhanced building code above what's otherwise required by Georgia law would be really helpful at the local level. I think property tax incentives and others that are more at the responsibility at the local level might also be helpful in advancing resilience.
Thank you, Representative Williams.
Thank you, Mr. Chairman. You make a living tearing things up. And I saw a lot of horrifying scenes there, but other than that, Ms. Lincoln, how did you like the show? My big problem is, in reality, on the ground, working Georgians, where starter houses now, $275,000 to $300,000, just as they sit.
Yep.
And everything you said, I agree with. What you say, you're going to make it better. About a 16% cost, you put $48,000 on already a big bill. And I'm just wondering, and you talk about the grants, I have so many calls, people think you can get a grant to build a service station now. But it's tough. But that's a big gap there. That's a lot of money when a lot of people are just able to qualify because of the cost of housing.
So I really appreciate your question, because let me clarify something in my presentation. The 13% increase is on the cost of re-roofing. So that's 13% over the $10,000 for a new roof or $15,000 for a new roof. It is not on new construction. When we're talking new construction, that's more along the lane of 1 to 3% of hard costs. So what grant programs have done is to help for a re-roof to pay for some or all of the cost of a new roof to this higher fortified standard. I should add that there are some models out there that are looking to try to help buy down the cost of increased cost to build a fortified for new construction as well. That's often happening more in the philanthropic space, so that you'll see philanthropies and foundations helping out Habitat for Humanity and others who are building for an affordable housing community or affordable housing.
I understand what you're
Yeah.
saying,
Mhm.
and I'm glad you clarified that. But there's a big spread between those that qualify for Habitat for Humanity and a working person who makes just a little bit too much to qualify for a program, but not enough We call it Alice in the economic development world. So even if we move it, the price of a roof now is astronomical. You add 2 or 3% of that, it just gets bigger. The roof to replace the first house I built is 3 times more now than the house cost when I built it.
Yeah.
So I mean, it's still a steep slope for the average Georgian.
And there are an awful lot of macroeconomic factors that Dr. Hartwig talked about. One thing I'll say, we need to think about housing costs, not on the day of purchase, but on the month-to-month nut of that monthly mortgage statement.
The mortgage payment.
And if we can help control for insurance costs by reducing the risk for the homeowner, then we are able to make the cost of housing overall a little bit more affordable.
Thank you so much, Mr. Newman. All right, we have one more witness, Ms. Ashley Duval. And Mr. Newman, definitely send us more information. 19 homes. We got probably about 1.5 million homes or more in Georgia based on the numbers I've seen, with 125,000 in Gwinnett owner occupied. So we need to get on that. So send us more information. Thank you. Ms. Duval.
Hey, Chairman Reeves. And I want to say thank you to every one of you that have signed up so graciously to serve on the Special Insurance Committee. I don't think y'all even begin to know, or maybe you're starting to figure out, the superstorm of complexity in the insurance world on every aspect. It's not as simple as it seems. And I'd like to kind of pivot back a little bit to what Dr. Snipes or Mr. Snipes had talked about a little bit ago on auto insurance and specifically uninsured motorists. But before we do that, kind of back up here, give you some background. Sorry, it's been a long day. I am an insurance agent. I have been an insurance agent for 13 years for one captive company for my entire 13-year career. I have been licensed in the state of Georgia, South Carolina, and Colorado. I tell you, captive is a hard thing, and especially in this insurance environment when you are having conversations with clients day in and day out, and you don't have options for those people anymore. So I have recently stepped away from the office. I am not tied to any carrier, but yet I still hold my insurance license and am researching actively, and I'm finishing out my MBA actually at Georgia Southwestern on the topic of hurricanes. So, but I want to take this time. I don't want to throw away the insurance industry experience that I have, because I feel like that knowledge is very relevant, especially the hands-on knowledge of someone that has been in it. You know, there are insurance agents that will write you a policy and be done with you, which there's nothing wrong with that. I've always been a full service agent. I will not only write your policy, but I will service it as well. If I have to become the liaison in the claims process, I jump in the claims process. If I have to go in my little fancy shoes and get on a roof or climb in the attic, I've been there too. So I've seen a lot of different sides of this that I would love to share with you, and hopefully my knowledge will help you guys do what you need to do, and hopefully coming together for solutions for Georgians, because right now insurance premiums are completely unaffordable. Insurance, when you go back to the roots and the history of what insurance is supposed to be, insurance is designed around the premise of indemnity. Okay, that is a promise that you're going to be taken care of in the event that something goes wrong. It's supposed to be a hedge. You're supposed to hedge your risk and help your own financial state. Right now, there is no hedge of risk on anything. If you have Georgians and people across this country that cannot afford their insurance premiums. Now, uninsured motorists, I can certainly educate you on it. We don't have time. We're all ready to go home. I will give you a little bit today, and we can certainly expand more later on, and I can send you stuff offline. But there are multiple factors of uninsured motorists. There's also underinsured motorist coverage. But to speak specifically to what I think you guys are seeing on a daily basis and the calls you're getting from your constituents, you have constituents getting hit by uninsured drivers. They're trying to file a claim with the other party's insurance company. And they're finding out, oh, wait a second, their claim is denied because that driver is not listed on the policy. So now they're stuck holding the bag. Well, if they have a newer vehicle and hopefully have a good policy that they have written, most of the time they have written themselves online. Think about all the complexities that you've heard in this room today. Just think about that for a second. They may or may not have uninsured motorist coverage to cover it. They may not have comp and collision to cover the damage from that undisclosed driver, that uninsured motorist. So when we're looking at undisclosed drivers, we're looking at people that are coming from a couple different buckets. First one, kind of break it down. Insurance companies, the captive carrier I work for, would run an audit as part of their business process. They're pulling DMV records. They are seeing which drivers are tied to what household that are not listed on an insurance policy. That then becomes what we call as an undisclosed driver. The insured, the policyholder, has 30 days to reply to that notice to indicate, hey, yes, that person lives in my household. No, they don't. They don't live in that household. They simply have to provide an address of where that person lives, and they don't have to be on the policy. Okay? Y'all, when you add a person, a lot of times when you're going to go to add that person to the policy that hasn't been on there, there's a reason they haven't been put on that policy. That household is trying to absorb their risk and not say anything in hopes where they can get their premium to where they can afford it. Is it right? No. But if it's going to come down to having some insurance or none insurance, no insurance period, they're going to do what they have to do to feed their family. So they're going to drive without insurance. They're going to lie. They're going to find an address to put on that undisclosed form, get it back to the insurance company. That driver is going to drive the vehicles in the household, period. And there's going to be claims and there's going to be accidents where people are getting hit and there's no coverage. The other big thing I want to point out to you with the undisclosed drivers right now is teenage drivers. Some of you may even have teenagers in your household. I would like to think, yes, Mr. Chairman Reeves. Oh, no, you're good. Be prepared. We see the happy images on Facebook and social. Oh my gosh, my youngin' got my driver's license. Everyone's excited. They're going to drive to school. You get some freedom back in the morning to do what you do. Then the call comes to your insurance agent, or when you go to add that teenage driver to your policy, and it's going to add $1,500 a month to your insurance premium. Not every average Georgian, not even people that are doing fairly okay, want or can afford that money. So what do you think those parents are going to do? Some of them have to work, don't have the option to get their child to school anymore. They are really hoping and banking that their child getting their driver's license was going to provide that family relief. They're not going to put them on the policy even though they're supposed to, because they found out it's going to be $1,500, even though I'm obligated as an agent. Now I know that child exists technically by the book. I was supposed to add them to the policy. There's a reason I step back. I'm not going to financially break a family. I don't agree with that. That's why we need help. But those teenagers, they're going to be driving without insurance because they can't afford it. That becomes an undisclosed, uninsured driver. You're also going to have situations in parking lots and hit and runs. There's so many different facets of this, but it all boils down to premium and the cost of insurance. When you look at an insurance policy deck page, you're going to have 3 different sections, or more sections, but the bulk of your premium is going to be in 3 areas, and that's going to be in your liability coverage. You're going to see it in your bodily injury coverage, your property damage coverage, and your uninsured motorist coverage. The only way that you're going to work on getting premiums down is if you focus on those 3 areas. An uninsured motorist just may help you get there, but it's going to be a complicated road to get there. I would like to see, or one thing that possibly you guys can look into is more, I guess, follow-up. There's so many people that pay their insurance premium just to get the tag or do what they need to with the insurance company to keep them happy, and they never pay the premium again. And it's not found out about until they go to have an accident, and it's not there. Or the state will do an audit every once in a while and say, hey, we have all these registered vehicles, let's make sure they have insurance. It can be 1 year, 2 years, sometimes 3 years before it actually is caught up in the system. So I don't know if something needs to be done on a monthly basis. I don't know what the right option is, but there's so many levels of that are broken. So I hope that helps give you just an overview, broad snapshot of what you're looking at.
Thank you for coming. Definitely think of some solutions and specific things for us to consider. That bill I mentioned earlier from Speaker Pro Tem Jan Jones, House Bill 585, the uninsured motorist idea she had about excluded drivers. And it's okay to exclude drivers, but don't give them the keys after you've intentionally excluded them. Having some consequences for that is what Speaker Pro Tem is looking at. So I definitely, we welcome your ideas on this issue of uninsured motorists and other issues. We appreciate you coming over here today. Do we have any questions for Ms. Duval? All right, that wraps up the committee. Thank you so much. Real quick, October 17th in Columbus, November 21st in Macon, December 18th in Gwinnett. The topics for Columbus are car insurance and premium tax, and then anything else within the committee scope. Thank you.